Good morning, everybody. Bobby, you better believe it's going to be a great week. Good morning, Cav. Good morning, Chef. Miss Debbie, Joel, Gary. Good to see you guys. How's everyone doing today? How was your weekend? Good morning, Hamid. Luciano, good to see you. Man, I am so excited to be here. Hey, Jim, nice to have you. Cav, I had an outstanding weekend. I did the Southern Texas loop this morning. Oh, your kids made it to England? Very nice. I went down to Houston, got to see my brother, which is always a treat. Melinda, got to see some family down there. Um, Headed over to see my parents, hang out with them. Up to Austin, hung out with my kids, picked up some stuff out of storage, and here I am back home in Dallas. So, man, it was busy. It was a busy few days, but hey, Freddie, gosh, it was a good one though. It's good to be home. I'm excited. I did forget Rockport, Bobby. Man, I'm still trying to get settled in up here. I'm excited because this trip this weekend was me clearing out storage in Austin, which means that I don't have to go back to Austin for anything other than to visit my children now. So, good stuff, definitely. And Houston was amazing. It was cool. Very nice, Gary. You earned it, man. Thank you. Rockport, Texas, Cav. That's where Bobby does all his fishing. I'm gonna go down there and pull some stuff out of the water with him one day. It was cool though. It was a meeting of the minds this weekend, guys. I got to sit at a table with, and you guys know these guys, with John Novak, Mark Dean, Cameron, Chris, Jim Forbes, pretty much the entire Next Gen sales team. I was there from an educational standpoint. And we did a lot of just talking, wanting to see how we can make stuff better for you. So, and a lot of your names came up. It's pretty cool. We talk about you guys like your family too. So, um, there may be a couple little rewordings here and there this weekend. Everything's always about clarity, but I'm excited about the week, guys. I'm so excited about the week. I'm excited about the opportunities that it's going to bring each and every one of you, hopefully. And I'm excited to teach you how to read indicators. So let's get going on the day. And let me remind you guys, if you're brand new with me, guys, I'm going to tell you right now, there are going to be times when you're wondering what the heck I'm talking about. There's going to be times where you're a little confused, maybe you're trying to figure something out. Um, all I need you to do, guys, and I can't stress this enough, all I need you to do is raise your hand, is just go, hey, Mark. Let's rewind for a second and let's talk about that. This is very much, you can't see your red green fields at all. Is it gray, Michael? All right, so if it's gray, whoops. Um, One of the things that you can do, let me see if I can talk you through it first. Right click and go to data series. You're sure you're connected to let's start there. Are you sure that you're connected? 100%, you've got a data flow going. Um, no worries there. Yeah, okay. So if you're all gray, there's a couple different things that can happen. The first thing I do is try to refresh all data. Right click on your chart. Good morning, Safia. Um, and reload all historical data and see if that works for you. That's always my first go-to. If that one doesn't work for you for some reason, Michael, a lot of times, and I don't know why with NinjaTrader 8, you can end up with a little funky data. So if you click on data series, where you have 10 days back on your chart, and I don't know why it fools it. I don't know the whys. I just know that it helps. Turn it to either 11 days or 9 days and see if that clears things up for you. Um, Jason had me do that once, and it saved my bacon, put me where I needed to be. So see if that works, and then if it doesn't for some reason, just get with Jason. Yeah, and you do have to do it on each chart. Thank you, Bobby. Last one did it. Perfect. Look at me with the skill set here. I love it. Jason was the only one missing this weekend. Would have been awesome to have Jason with us down in Texas, but he's off in West Virginia or something like that. So, guys, let's start with the beginning, right? Let's check news. Forexfactory.com. Each and every morning, guys, when my charts are loading, this is my first stop. And it's not because I really care what the news has to say. It doesn't matter to me. I don't trade the news. I don't base my decisions off of the news. But what I will do is I'll look to make sure that there's none of these high impact news releases coming out, because if there are, I don't want to be in the market. I don't want to be in front of that, because there are people that do trade news. There's the people that make the market move, and these are the people that may react if there's something going on, something significant. So I make the choice, because all I'm in control of is my choices, to not be in the market in front of high impact, in front of medium impact news releases. So what I do is I sit on my hands when I see this. So, for example, tomorrow at 8:30 a.m., there's the core CPI. They love M&Ms because they melt in your mouth, not in your hands. So at 8:25, I might say, all right, time to sit on my hands. Let's wait, make sure that I don't get caught in that reaction. And then anything and everything that I talk about, and I say this every day, and I hope that you guys believe me, every tool that you need to be successful is in the tutorial section. Good morning, Jim K. Every tool that you need to be that you need is right here in the tutorial section. And if you click on it, um, it'll discuss the rules. It'll talk about the software. It'll give you an idea of what you're looking at. And this is where I go to for the rules that I discuss. If you have a question about something that you hear in class, or one of those one of those concepts that we're talking about, glossary of common terms. Mark keeps saying one-to-ones. What the heck is a one-to-one? Well, there it is right there. And reversal bar markers and divergence and all of these things are available for you. But I don't want you to feel like you always have to run off and read, right? I want you to feel real comfortable just raising your hand and going, hey, Mark, do me a favor. Let's talk about that divergence. Let's talk about those one-to-ones. Let's make sure that I understand completely what I'm looking for here. Because once you get the basics, guys, it's sky's the limit for you. Good morning, Dwight. And then from the glossary, I'm going to tell you right now the thing that I focus on. So let me tell you how class goes, guys. My first hour is dedicated to giving you a foundation. My first hour is dedicated to having you focus on the entry for one particular trade, a high probability trade, a high probability trend trade to be specific. And this is a trade when each indicator on every chart is going to agree for the trade, guys. This is your best of the best. This is a trade that typically wins 70 to 80% of the time. This is a trade that's going to create confidence through the memory of success. This is a trade that only has three rules, and those three rules happen on just two charts, guys. This is going to be your focus for the very beginning of your run with Nexgen. And I talk about it a lot in the first hour, and I say the same thing every first hour. So I'm very much a broken record, but I do that because this high probability trend trade, guys, this is your foundation. This is the one that if you take just a little bit of time to understand it, it turns you into a chart reader. And being a chart reader should be your goal. Because chart reading is 90%. And I kid you not, chart reading is 90% of your day, waiting for advantages, waiting for rules to be met so that you can enter the market. And you're going to understand fluently, and I use that word fluently because, I don't know, I just like the way it sounds. You're going to understand where the market is likely to continue. And these continuation points become entries for the highest probability trend trade that you can take. And you're going to understand where the market is likely to go. And this is going to help you build profit targets and know where the most likely outcome of the move is. And then finally, you're going to understand where the market is likely to stop. These are what we call termination conditions. Termination conditions are where the market reverses. Termination conditions are where decisions are made, is the way I want you to think about it. These termination conditions are going to be those Fibonacci areas that you see on your chart. Fibonacci resistance this is what we're going to call a termination condition. And when this right here reverses the market, we're going to look for our trades. And you're going to see over and over key areas that hold. And we're just going to let them hold, right? We're not going to trade into them. And then we're going to look for our opportunity to get paid after they reverse the market. And this is one of the biggest concepts for the new user, is understanding where the market is likely to stop. And One thing is not trading into those areas, giving yourself that advantage of understanding where they are and knowing that they might hold. But most importantly, we're going to use these likely to stop areas, these termination conditions, and these become an anchor. These become a solid platform for the highest probability trend trade. When one of these lines reverses the market, guys, we're going to look for that best of the best, for that trade that typically wins 70 to 80% of the time. And we're going to be able to do it with only three rules. I love this one. So the first hour, this is exactly what we're going to talk about. We're going to talk about the high probability trend trade. The high probability trend trade, each indicator is going to line up on every chart. The high probability trend trade is only three rules, and each rule provides an advantage. Rule number one gives you the advantage of momentum, of a market that's likely to continue. Rule number two gives you a clear path. This is the one that keeps you from trading into those likely to stop areas. And then rule number three provides you an entry. And this entry is where the market is most likely to continue. And it's these three advantages that come together to create a trade. And these three advantages happen on only two charts. So the first hour is dedicated to learning how to read these two charts to gauge these two advantages. You see people posting pictures in the room. Our second hour, our third hour, is dedicated to reading your charts, to seeing what you post, to giving you feedback on everything that you do. But I do want to remind you guys, if you have some place to be, if you have a job that you have to get to, a business meeting that has to be conducted, and you need feedback on your chart before this first hour is up, please do me a favor. Let me know that so that I can make sure that you're taken care of. But we're going to use these two charts because it's really simplicity. We're going to focus on the best of the best, keeping it as easy as possible, keeping you focused on only the things that matter. Your large chart is a broad stroke of a brush. It is very much showing the overall opinion of the market. Your large chart is going to determine direction, momentum, and areas. And your first two rules happen on the large chart. And when they're true, when they're met, when you've seen them, you will have the advantage of momentum and you will have the advantage of a clear path, nothing between you and your target. Um, Once these two advantages come into play, you're going to focus on a smaller, faster chart. You're going to look at this refinement chart. This is your entry chart. And what happens in only one bar on this large chart will literally be broken down into 50 to or 15 to 30 bars on a smaller, faster chart. And we'll use it as that refinement to pinpoint where the market is likely to continue, where you guys are going to be able to embrace rule number three to get you into the market at the best spot because great entries create manageable trades. So my goal for you as the brand new user, if you're new to my class, if you're just learning the software, or maybe if you've been with us for a while but you're looking for that consistency, focusing on the entry for give me a couple weeks focused on it. It's going to get you the ability to recognize a market, where it's likely to continue, to be able to read your indicators, and to take that trade that typically wins 70 to 80% of the time. It is not, Walter. A momentum trade and a high probability trend trade are two separate entities. And while they are similar, relying on momentum, relying on a clear path, the entries are a little bit different. Absolutely. And guys, we'll talk about any trades that you want to talk about. In those second and third hours, all you have to do is show me a picture and say, Mark, let's talk about this. And I got you. But I'm going to remind you that if you're not where you want to be, if you're not winning 60+% of your trades, if you're not making money every day, or at least most days, guys, simplify. Go back to the best of the best and your path to becoming a confident trader ASAP. This first one bums out you shy people, but I want you to work through that. Post your trades in class, guys. Win, lose, or draw. Post what you see. Tell me what you did. Whether it's a trade, whether it's a chart read, whether it's just a question about a line on a chart. Get me pictures in the class because every time you post a picture, it opens up a discussion. It's really a one-on-one session. And this is one of the things we talked about this weekend. Guys, be selfish with your time in this classroom. Pretend like it's just us. And if you're uncomfortable because you're like, oh my gosh, Mark's going to see me in the grocery store and he's going to make fun of me. Jim, change your name to Jamie and post as Jamie, right? Chef, change your name to truck driver. Pick a different career, right? Debbie, become Donnie. Tatiana, you can become Timmy. Whatever it takes to get you to post in this room, guys. I never judge somebody on their trades. All I do is talk about the advantages. So get in the habit of posting your trades in the room over and over. And then use a spreadsheet. To see something is great, but to be able to go back and study it is outstanding. And that's what the spreadsheet is for. And Nexgen gave you this when you downloaded the software. It is in your Nexgen study picks, but I'm going to drop mine in the room right now, and I'm going to encourage you guys to steal it. But everything that you did yesterday, well, obviously not yesterday, it was Sunday, but everything you did on Friday, you should be looking at this morning, and you should be asking yourself what worked and what didn't work, and what kept me calm, and what made me nervous. And what you're going to find is that you're going to begin to recognize patterns in the market that are bringing you success. But more importantly, you're going to understand the patterns in the market that are robbing you of success. And then my job, and where I really think I excel, to my own horn, is I recognize patterns in you guys. I recognize through your pictures what you're inclined to do, whether it's trading into those termination conditions. Hey, good morning, Jose. Or whether you tend to jump in early, or whether you jump out early, or I begin to recognize these, and every time you post in the room and every time you look at your spreadsheet, you're going to recognize these patterns as well. Um, we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. You're going to simulate. You're going to practice, guys. There is zero danger on simulator. You can't blow out an account if it's monopoly money. And then the flip side is you can't buy a new house with simulated money. Trading in determination conditions, trading a chef, yeah. You can't have that, chef. Trading in determination conditions was my deal. I was the original, the OG term trader. So much so that I got a whole lesson on termination conditions from my brother standing in the middle of the classroom, and it was one of the best things to ever happen to my trading. Um, I want you guys pulling the trigger every time you think the rules are met. I want you practicing it. I want you taking trades, taking chances, breaking rules, going screaming past your limits. And that's okay, right? Because it's monopoly money. But post them in the room so that we can talk about what you're doing well or maybe what you're not doing well. And remember that getting lucky on simulator rarely translates into long-term success when you go live. It's almost like the market knows. So we want you practicing the correct rules, which means every time you take a trade, every time you present in class, write your rules on the chart that you're presenting. Write the reasons that you got into a trade. Write the advantages directly on the chart to make sure that you understand what you're looking for as well as what you're looking at. Um, and then we're going to simplify today. We're going to focus on the high probability trend trade, guys. Really nothing more than the entry for a high probability trend trade. And then from there, that's going to open doors. I teach a foundational approach to using the software, to reading the software. I create a solid base from which you can create an entire trading plan that suits your needs. But you need to have the foundation first. You need to understand the basics. And then, guys, anything is possible. And you're going to see trades in this room all the time that aren't high probability trend trades, but they're based off of chart reads and they're based off of advantages. So let's walk and then run. Oh my gosh, Bobby, you can build a career off the foundation. You don't need to go beyond it. But we're all human, and man, if one trade is good, isn't 173 trades better? Not always. Not always. But thank you for saying that. And I want you guys to see that the people that are the most successful are the most consistent. And the most consistent people don't give themselves a lot of things to think about. They simplify. What are you going to commit to? And you have to learn the looks so they're easy. And that's where repetition comes in. That's where simulation comes in. That's where practice comes in. And if we go back to the spreadsheet, this is where repetition is going to build your plan. Every time you take a picture and your rules are met, I want you to fill up your personal trade setups. I want you to say, this is what I'm committed to getting into the market. And then the third tab, guys, this is my gift to you. This is about 270 pictures of clients using the software based on chart reads, annotated charts, looking at advantages, looking at entries, looking at management. Go through and start looking at these. And if you have a question, feel free. You can click on, let's see, who's in the room that I can show off a little bit, right? Jose's perfect high probability trend trade short. Odds favorable, clear path, beautiful entry back to resistance, money twice. This is what it takes to get Jose in the market. Um, but because it revolves around the advantages taught, it's in here. And it's annotated. It tells me why he did what he did so I can come back and I can just study everybody's pictures so that I can eventually learn to do what they're doing. And that's kind of what we do each and every day, guys. So embrace the idea that it doesn't have to be a lot of trades. Focus on the best trades first. We're going to get into right now recognizing the advantages, and we're going to do it with only 3 rules. So without further ado, ladies and gentlemen, let's learn the high probability trend trade. And everything starts on the large chart. The large chart leads the way. And the large chart must have strong trigger lines, guys. In order to even begin looking for a high probability trend trade, the large chart must have strong triggers. And I'm going to show you a cool little phenomenon. The only way, so we had a big debate on trend, on whether or not we're looking for longs or shorts. The only way that you can have high probability or strong trigger lines. The only way that you can have strong trigger lines is if the background and your trigger lines are the same color. And if everything is green, you're going to be looking for high probability trend trades to the upside. And if everything is red, you're going to look for high probability trend trades to the short side. And it really is that simple. And I say this a lot, and I think that this is important because not everybody has the gift of color. And I see it more and more all the time. When your small triggers break above the large triggers and they begin to dissect, that's what paints that background green. So you can see the change in color. When they begin to get below the large triggers, you can see once again that the background color changes. Whether it's a shade of gray, whatever it is for you, it's those trigger lines dissecting and getting below that puts us looking for short trades. And it's that dissection to the upside that gets us looking for long trades. Because rule number 1 says strong trigger lines. And the only way that I can have it is if my small triggers and my large triggers are green and they're wide in the angle to the direction of the trend. And it's the separation between the small triggers, these solid lines, and the large triggers, these dashed lines, that lets me know that I have a strong trigger look. The separation, the angle up, they're wide, everything is green. This is a strong trigger line. And when I have a strong trigger line, the odds are favorable for the market to continue in the direction of the trend. So you're going to hear in classroom all the time, odds favorable momentum, and that's what a strong trigger line provides you. So we look from the point of separation, when the smalls break above, create separation, until the smalls return and work their way inside. And this becomes that strong trigger look. This is rule number 1 defined in pictures. And rule number 1 can only happen with a green background when everything is the same color going in the direction. So you're going to hear me say, don't fight the trend. Don't fight the direction of the market. And when it's green, it's up. And when it's red, it's down. And in a downtrend, when the small triggers are below the large triggers, when there's space between the two, that separation, that lets me know that the odds are favorable for the market to continue down. And this is rule number 1 defined in pictures, letting me know that this is a market likely to continue in the direction of the trend. And when I have this look, one bar on the large chart may develop one of these tails, one of these little wicks. You'll see it in the uptrend, you'll see it in the downtrend. These wicks are nothing more than little retracements on a smaller, faster chart. These wicks are how you're going to enter the market, and you will be able to pinpoint exactly where the bottom of that tail is most likely to form, but you're not going to do it on a large chart. That's that refinement process that I talked about. But if you go back historically and you look at the market after the fact, you're going to see that odds favorable momentum. You're going to recognize these tails knowing that there was a potential entry for you, and you'll be able to see how that market continues in the direction of the trend. And this becomes a study tool for you to go back and build trust in these rules. And then when the small triggers work their way inside of the large triggers, we call this a weakening of the large triggers. And when I weaken large triggers, guys, anything can happen up or down. This is the absence of strength. And this is where you're going to have the opportunity to sit on your hands, to do nothing, to recognize that the advantage of momentum is not in your favor. So, guys, just a quick question, and this is for each and every one of you. If everything is the same color, then you can have odds favorable momentum. If everything is not the same color, you are unable to have odds favorable momentum. Does that make sense to everybody? I know there's a couple people that were worried about trend and identifying trend. Let it all be the same color, guys. Let there be separation. This is your advantage. And then when they weaken, the advantage goes away. And this isn't something that happens all day. And I like this picture, and I was talking about this one this weekend. Separation on the far left here, everything is the same color, no matter what that color is in your head, and the market pushes down. The small triggers work their way inside of the large triggers. We get that anything can happen scenario, and notice that there is a reversal. The market heads the other way. Everything is the same color. The separation is there. This becomes your potential entry for the highest probability trend trade, and sure enough, it carries you all the way back up until the triggers weaken. Odds favorable momentum, guys, should set the tone. Odds favorable momentum is your highest chance of pushing in the direction. Odds favorable momentum will even cover an awful lot of mistakes. So if you're going to fudge rules, guys, don't let this be the one that you fudge. You can see that that reversal gives me odds favorable. There's one of those tails. The market pushes down. And then this, just for an example, notice that the background is green or whatever color it happens to be to you, but notice that the trigger lines don't match. Here they don't match one another. Here they don't match the background. This is a transition phase, guys. This is where buyers and sellers are duking it out. They're fighting. They're trying to take over. But neither of them has a clear advantage. This is where Nexgen users have the unbelievable ability to do absolutely nothing, to not try to predict, to not get caught up in their fight. Eventually, someone's going to win, guys. Somebody always wins. And when they do, they're going to give us odds favorable momentum when we go back to that first advantage. So strong triggers lead the way. This is on the large chart. In your large chart, let's get to one. I'm using the most current bar. So I'm going to ask, small triggers are below the large triggers. The large triggers are wide. They're angled in the direction of the trend. Triggers and background match. Guys, this is odds favorable momentum. Give me a Y if you can see it by using this most current bar, separation. And I know, Cav, you got this, right? Chef, you've got this. Jim 1966, I'm asking you, Big Game Biff. You guys that are new to me, I want to know that you're okay with this concept. Everything is the same color. The separation between the two lets me know that I have odds favorable momentum. And if I go to another chart, everything is the same color, but my small triggers are on the wrong side of my large triggers. This is not odds favorable momentum. This is not the absolute best look. My advantage is not present. And if we go to the current market, you can see that it is there. Small's below the large are wide, they're angled down. Guys, the most current bar gives you that information. And then finally, on the NASDAQ, I do have smalls below the large. My large are wide. I'm using my first bar to identify that momentum is in place, guys. This is your first lesson. And if you get this, life is pretty good. And look at that. There's a tail, there's a tail, there's a tail, there's a tail, and I'll be darned, the market continues down. There's a tail, and the market continues up. There's the tail, and that market pushes up until it doesn't. There's a tail, and that market pushes up. Guys, here we go. Rule number one is met. Odds favorable momentum. So now we're going to look for those likely to stop areas. Now we're going to recognize whether or not a termination condition is true. And a termination condition is also on the large chart. And I want you to give you this little key to the map. This picture, in a nutshell, will tell you everything that you're looking at with Nexgen. But this also identifies the areas. Anytime I say an area, I mean a line. Whether it is a magenta line up top, which happens to be a divergence high, which means that a pivot, the market went up and down, whoops, pardon me, has a loss of momentum. Divergence means loss of momentum. I'm also looking for divergence lows, the cyan line, that is going to print from a pivot when there's a loss of momentum, guys. And this is an area. Yeah, pop it in the room, chef. But this is not a termination condition. This means that when a cyan line prints, the buyers stole momentum from the sellers. And when a magenta line prints, the sellers stole momentum from the buyers. Would this be considered only two since it reached the cyan? So two divergences, you're asking if this is the third divergence, chef? Question about divergence. Would this be considered three divergences or two since only two reach the cyan line? Are you referring to this as your third up top? And you're asking if the negative 20 would be considered three divergences? All right. That's only one divergence. Just one. It comes off the pivot. So, and then Biff, I'm gonna repeat this too. So, Chef, the only time you can have a divergence is if a pivot creates the line. So, price goes up. There you go. Price goes down. And if you see the line print and the negative number print, and the number is irrelevant to anything, what this means, Biff, is that, and let me do it in pictures real quick so I can use arrows. Anytime one of these lines prints, magenta from a high or cyan from a low, what I said is that in this move, the buyers are in control 100%. They're pushing up, the momentum is theirs, everything is going up. But what this divergence, when it prints, lets me know, I'm going to use a different color arrow, is that the momentum in that move doesn't match price. So price goes all the way up to this key Fibonacci area. Divergence is waning in the background. That's what makes this line print. So from a low, whoops, wrong one. So from a low, if a cyan line prints, it means that while the sellers, when price reached this area, the divergent or the momentum doesn't follow. And if a magenta line prints, it means that price reached 79.46, but the divergence was lagging somewhere behind. Does that make sense? It's just a loss of momentum, and it's visually recognizable if a cyan line prints from a low or a magenta line prints from a high. That's all it is. It just means that the momentum isn't following the move. Does that make sense, big game? And then we can use these lines as key areas in the market that may create a turnaround. So we're going to look for the divergence lows, and I'm going to show you the recipe for that. We're also going to look for red Fibonacci resistance or blue Fibonacci support or yellow one-to-ones. And what we're going to do is we're going to embrace a very simple recipe. Did I? The buyers are in control. Okay, I know what I said. Ba, ba, ba. The buyers were in control. The sellers robbed their momentum. Or from a cyan line, the sellers were in control and the buyers robbed their momentum. Is that the one? Gosh, I say the same thing so much. I hope that's what I said. Perfect. That's how I think of it. I think of it as the guys pushing down have every advantage until these guys say no more, and that prints that line. And then we still have to see what happens because there's fights in the market. And we're going to see what happens, and we're going to be able to gauge whether or not this line is going to become a line in the sand. Let me go back to the rules here. It's just a two-part process, and everything begins with price reaching the area. Because these areas are where decisions are made, guys. Termination conditions are where decisions are made. Fibs are where decisions are made. So it may be where the buyers buy or where the sellers sell. But we can see these lines on our charts through Fibonacci, through divergence lows and highs, through yellow one-to-ones. And if those price bars come down and reach Fibonacci support, or if they push up and reach Fibonacci resistance, all you have to do is ask yourself, where are my trigger lines? And the trigger lines, the same ones that create momentum, are going to let you know whether or not you've reached a termination condition. So the recipe is pretty simple, and we'll do it right here. Price is pushing up, it's pushing up, it's pushing up, and it reaches resistance. When it does, if all the trigger lines remain below, resistance has the potential to stop the market. This is a termination condition, and all you have to do is not trade into it. All you have to do is say, I've reached resistance, the triggers haven't broken, it's not a clear path, and it may reverse the market. And sure enough, it does, right? And then price reaches Fibonacci support. In the moment, you don't know whether it's going to have the same reaction. This is where the buyers buy. This is where profits may be taken. And you just don't know. So you wait for it to clear. So if price reaches an area and the triggers remain above support, below resistance, you've reached a termination condition. Absolutely no trades into that area. You're going to wait for the reaction from the people that move the market. If both your small triggers and your large triggers get to the other side of the fib in question, here it reaches resistance, no triggers, no trade. Small and large break through resistance. Now it acts as support. There's odds favorable momentum. And guys, there's one of those little tails. There's that potential entry to carry you to the upside with all that momentum and a clear path. This is the simple process at first. Good morning, Snorri. Price reaches, no triggers, no trade. Small and large breakthrough. Now the path is clear. I'm going to give you this picture, and if you keep it this simple in the beginning, it's gonna take the burden of guessing off of you. Price reaches, no triggers, no trade. Well, when is the path clear? When both the small and the large get to the other side of the line in question. Support begins to act as resistance. And once again, I want you to notice, when small and large get to the other side of support, I have odds favorable momentum. There's one of those tails. This becomes your entry to carry you down to the next level. So is everybody good with the simple recipe? And we can see it on a large chart, and we'll do it right now. Support behaves as resistance. Odds favorable momentum. There's one of those tails. And guys, this happens every day. And it happens all day. And let me get a market that's been bouncing off of areas a little bit. And this is a great example. Support, I will try to. Look at, this is one of the beauties of Fibonacci, guys. Resistance reverses the market. It comes back and tests resistance, pushes down, tails with odds favorable momentum. It reaches these yellow one-to-ones, and look at the bounce. Look at the reaction. The buyers tried but failed. And then it pushes down to the key area. Price reaches support and none of the triggers break. Next-gen users know absolutely no more short trades. Support reverses the market. Triggers break resistance, pulls back, behaves as support. Goes all the way up to resistance, no triggers break. You can see this recipe over and over. Pushes down, comes back to resistance, all the triggers are below, it's likely to stop the market, and sure enough it does, directly to Fibonacci support. From Fibonacci support, it reverses the market. It gives you odds favorable and it pushes up. Yep. So in this particular picture, Big game. This is just kind of termination conditions doing their thing. And this is a great way to develop trust in the idea that if price reaches an area and none of the triggers break, sit on your hands. Price reaches Fibonacci resistance. Every trigger line remains below this area of resistance. For next-gen users, it means don't go long. And what a great thing, right? And then small and large get below this area of support. It comes back and retests resistance. We know we're not going long, but we're not going short. Small and large get below the area, pull back to resistance, and it continues down. Small and large get below the area, comes back, continues down. And it does it all the way to this key area down at the bottom, 76.21. And we knew about this area from midnight. And that's exactly where the sellers wanted to get. And this is exactly where the buyers wanted to take over. And you can see that decision in the reversal of the marker. And then from here, look where it pushes up to with those weak trigger lines, right to Fibonacci resistance. And even more so, small and large break resistance. And notice how it pulls right back to it as support and then continues the move to that next key area. So all we're doing right now, big game, is we're identifying where it may stop, right? Because where it may stop, if nothing else, it says don't take that next trade. And look how support holds. And look at that odds favorable momentum. And right here in the moment, notice how it hasn't reached the area yet. So big game, we went from a termination to a full reversal to odds favorable momentum. And this fib in the distance is not a termination condition because it hasn't been reached. This fib in the distance becomes a target if we get an entry. So we're using it not only to identify where the market may stop, but even more so where it's likely to go in the event that we get a rules-based entry. Does that make sense? And you can scroll back 10 days on any market. I don't care if it's stocks, futures, whatever, but you can go back and you can see this happening over and over. So price comes down, sellers in control, buyers steal their momentum. That's what creates this cyan divergence line. This line doesn't print until about the third bar up. That's when the calculation is done to determine that the momentum didn't follow price. It uses MACD-BBs in the background. You don't have to do any comparisons. And this is not a termination condition because the recipe is that price reaches an area, not that price creates. But when price comes down and reaches this divergence low, all you have to do is ask yourself, where are my trigger lines? And if your trigger lines remain above the divergence low, this is a termination condition. This is what we call a pivot stop out. Here's your pivot, and this is where they stopped them out. Everyone that went long right here just got stopped out, and then they go back up. This pivot stop out is a very powerful termination condition. This pivot stop out becomes even more powerful when it happens at key Fibonacci areas. So see how the divergence line prints? And this is a great example of 90% of your day is spent reading the indicators. Everything says up until we reach Fibonacci resistance. When we reach Fibonacci resistance, big game, all you're doing is saying, where are my triggers? They're all below resistance. You're not going long into that area. It may stop the market. You knew this because of a simple rule number 2. Price pushes all the way down to support. And once again, where are my triggers? They all remain above the areas. I'm not going short into this area. This is part of that 90% of your chart reading. From here, price comes up. They retest, right? Fear and greed, fluctuations in the market. Price reaches Fibonacci resistance. The triggers remain below. That's a termination. Price reaches the divergence high. Triggers remain below. There's a second termination. And that second area of resistance, no triggers through. 3 terminations in the same spot. This is powerful. Awesome. Thanks. I try to say it different, at least a little different every day, because everything clicks different for people. This termination ultimately reverses the market, gives me odds favorable momentum. I haven't reached the next area. Guys, this little tail becomes your highest probability trend trade. This is the best of the best. When a termination creates a full reversal, we're going to call it a strong top. When a termination creates a full reversal from a low, we're going to call it a strong bottom, and a strong bottom is the precursor for the highest probability trend trade. So price reaches an area, where are the triggers? Price reaches an area, where are the triggers? It may reverse, it may break, it may bounce. The thing is we just don't know. And this bugs a lot of people, especially you control freaks, is I don't know what the market's going to do. The sellers are in control. The momentum is odds favorable. Everything says down, and then it reaches these yellow one-to-ones. And when it does, absolutely no trigger lines break, guys. Does everybody see how that's a termination condition? Good morning, Sydney. We're at least not going short, right? Maybe not going long yet. And then the buyers push back right off that key area. And notice that all the triggers are below resistance, and the sellers push back, and the buyers fight again, and the sellers aren't done, and the buyers are trying, and the sellers push. This is your 90%. This is where the average day trader gets chewed up and spit out because they're not letting one side establish dominance. And then let's go through our rules, and I want you to see something. This termination creates the full reversal. All I did here, big game, is I'm showing price reached yellow one-to-ones and no triggers break. Do you see that? That's the biggest lesson that I want you to get. No more short trades into that area. Cool, right? And now I'm just showing you the whys. Why don't we go short into that area? Because decisions are being made. The people that move the market, the buyers are reacting to the area and they want to push the market up. And the sellers may not be done and they want to push the market down. And that's what this indecision is. Notice that the trigger lines don't agree. Notice that nothing gets above resistance, but I can't go short. This is that 90%. This is where patience pays off. You have rules to keep you out of this mess. Ultimately, this termination creates the full reversal, and that means that the large triggers go from red to green. After the full reversal, I get all of my trigger lines above resistance, and it begins to behave as support. So we're doing this sequentially, right? Notice that the smalls are outside of the large. There's one of those tails, big game. This is where you guys go long. You sit through all of this nonsense. You let it happen. You let them fight it out. This is Tyson and Holyfield going to town. This right here is where Tyson bites the ear. This is where we have every advantage, guys. This is where we have momentum. This is where small and large are above resistance. It behaves as support. There's that tail where you guys are going to find an entry on the smaller, faster chart. And there's that movement off to the next key Fibonacci area. It's what you don't do in that 90% that makes this 10% so effective. And I think that this is one of the great reasons that having that very simple rules-based scenario is great. And then remember when we said a few minutes ago, 8 minutes ago, that with all of this momentum and a clear path hadn't reached the area, big game, we knew exactly where the market was likely to go. And do you see the tail with odds favorable? Our next rule, our third rule, whoops, get back here, is going to show you how to catch this trade. It's going to show you how to enter with odds favorable momentum and with room to get to the next target. And this entry at 65 took you up to 88 at least, which is $230 per contract. So here's what it looks like in the moment. Odds favorable, haven't reached the market, guys. This is rules 1 and 2 met 100%. And then if you look at that tail, that was your pullback on the smaller, faster chart. And we're going to talk about how you guys can capitalize off of this. So termination conditions are key, guys. They're going to keep you out of trouble. Odds favorable momentum is going to push you in the direction of the trend. There's one of those tails once again. I'm going to give you guys one more termination condition that revolves around that loss of momentum divergence. Um, and this is the only termination condition, and write this down on a piece of paper, please. This is the only termination condition that I give any respect on a smaller, faster chart. And it's three divergences, three losses of momentum in the same price range. It may terminate a trend. It may create a push beyond your best of the best areas. Three divergences in the same price range might change the trend, whether it's from a low, cyan lines, or from a high, magenta lines. This look becomes even more powerful when you take the simple lesson of momentum and you recognize that small triggers are inside of the large triggers. So three divergences in weak triggers adds fuel to the fire. Three divergences, weak triggers, and a higher pivot from a low or a lower pivot from a high adds even more power to that look. Um, because now you've got a head and shoulders. Price and momentum aren't pushing down. So you're going to see this look at a low or this look at a high when your larger, slower chart may be turning around from the middle of nowhere. Um, and that's really what we're going to use these three divergences for, when not to take that next trade initially. But as you grow with the software and you begin managing these trades, you start to learn how to take profits or when it's time to exit. Three divergences in the same price range may be an indication that it's time to get out of that trade, to wait for the next best of the best, because things may be changing. So three divergences in the same price range may terminate the trend. That's something that happens only on the smaller, faster chart. That's where we're recognizing it. And let's see if we can find an example on crude oil where three divergences from a low, 1, 2, 3, higher pivot, began the move. So if you were thinking short trades, this told you no. And then 1, 2, 3 divergences from a high push you down lower. They try one more time, but ultimately the market pushes down. Once again, these three divergences push you to a lower area. So pretty simple recognition. It takes a little bit of practice. But once you do the practice, you'll probably never miss this trade. And just for grins, Exhibit A. GWC caught that one on crude and took it right up to the next key area. So the goal is to just be able to do it live, to study it so that you can get this look, understand this look live. And that's rules 1 and 2. Um, those strong triggers push the market in the direction, right? And then not hitting one of those lines gives you room to get to the next line. These are the first two. These happen on the large chart. And these two rules are what the people in control want to have happen, what the large crowd wants to have happen. They're going to define the trend, the momentum, the areas. All of this leads the way. But once we have that, we're going to refine that broad stroke of a brush. We're going to take that one single bar on the large chart. See how I have a black square around one bar with odds favorable momentum? And we're going to turn it into 15 to 30 on a smaller, faster. And you're going to use a limit order at an area. If we have three divergences, but the 13.2 is red. Um, So actually, you know what? Let me answer that 1 second, guys. Excuse me 1 second. I think I have an electrician at the front door. Um, I will be right back. I apologize for the quick break, but I need to take just a minute. All right, my apologies for that. I'm sorry, guys, as I'm moving in. I've got things going on in the new house. So big game, if you have three divergences on the low, but the 13-2 is red, um, still have to wait for the 13-2 to turn green to enter long trade. For the high probability trend trade, absolutely. Because to take the high probability trend trade, you have to have that odds favorable momentum. But big game, let me share with you something pretty amazing is that as you mature with the software a little bit, see how the large chart is still red, but it reached the key area. See how multiple divergences confirm that this termination is probably good. This is going to open up doors for you as you grow with the software, as you learn to chart read. And this is one of the things that my brother will begin to work on with people is finding opportunities off of termination conditions to catch the first move. So for the high probability trend trade, I'm going to say absolutely. You want to wait for things to roll, right? You want to wait for things to go, exercise a little bit of patience, and wait for everything to line up. But I'm not going to lie. When you get good at reading these charts, you may formulate a plan that gets you in a little bit earlier. And if you look at Safia's trades in this classroom, she utilizes these termination conditions and the small triggers on the small chart to capitalize when the conditions are right. So for the high probability trend trade, absolutely you're going to wait for things to roll. But once you get comfortable with termination conditions. And once you get comfortable reading your charts, that really becomes one of the opportunities for you is being able to catch more should you feel like you need to. Does that make sense? Because the only way to have that momentum, that best of the best momentum that we try to keep the new users looking for, the only way to have it is if the background matches the triggers. I hope that made sense. And I want you guys to remember that what we're laying down in the first hour is a foundation. What we're laying down in the first hour is the very, very basics to get you focused on advantages so that you can recognize these advantages and turn them into more opportunities should you feel the need. So um, I hope that answered it. I hope that was okay. So the large chart said up, or the large chart gave us strong trigger lines. The large chart said that the path is clear. We're going to refine that one bar on the large chart to multiple bars on the small chart. And rule number 3 has us using a limit order, meaning that we're literally going to wait for the market to come back to us. And we're going to use a limit order at an area. High probability trend trades come from areas. They come from lines on the chart, and those areas need to be inside of what we call favorable large triggers. So when I talk about favorable large triggers, you're going to hear me say this. And again, I want you to remember, I'm putting down a foundation for you. I am keeping this the highest probability trades that I can teach you initially. Favorable large triggers mean that on your small chart, both the large, the solid, or the dash lines, and the synthetic, the stepped lines, are wide. They're angled in the direction of the trend. They're one on top of the other, like snakes riding piggyback. When I have this look with the large and the synthetic, it's going to create the smallest opportunity, the window of opportunity. And the window of opportunity is where the market is most likely to continue. And this is where you are going to enter the highest probability trend trade. So I'm going to give you this picture of favorable large triggers. And once again, I can't say this enough, guys. As you learn to read indicators, the likelihood of you deviating a little bit from this most basic plan, it goes up exponentially. Um, but we're going to use a limit order at an area inside of favorable large triggers. And we're going to buy or sell a pullback. And a pullback is nothing more than a little retracement in price that's counter to the underlying trend, that fights everything that the large chart is making happen. It fights the direction, it fights the momentum, it fights the clear path. and you get the small crowd, these yahoos give us a little push. This is where we find our entry. This is the best of the best. And you'll see it right here. The large chart set up. The large chart had a clear path. There's that tiny little pushback against everything that the large chart said. This is where we're going to capitalize, guys. This is where we're going to get into the market. This is where we'll literally wait for the market with a limit order to carry that momentum up to the next key area. So when the large chart says up, you know what? We made slides in here the other day. Let's see if we can go through these, the entry slides. These are on the worksheet. When the rules are met on the large chart, when the momentum is down, when the path is clear, that's the only time I go to looking at the small chart. So I'm going to identify my large and synthetics. They should be wide and angled in the direction of the trend. And I'm going to wait for the beginning of that pullback. And the pullback begins with a reversal bar on the smaller, faster chart. Or if we're in an uptrend, it begins with a red bar on that reversal chart. In a downtrend, it's going to begin with a green bar. This sets us up to look for our area for entry. So when I get the reversal bar, I'm going to identify from the top of my trigger lines, the highest line of the two, large and synthetic, to the bottom, the lowest line of the two. So the tighter these are, one on top of the other, the smaller this big box is going to become. Give me a Y in the room if you're with me so far, please, because great entries create manageable trades, guys. So I'm looking at the triggers, but it's inside of these triggers where I'm going to look for areas. And the areas can be fibs, mid bands, yellow 1-to-1s, and they need to be inside of those triggers. So we go from identifying the triggers to identifying the windows within. And guys, this is where the market is most likely to continue. From the lowest point of resistance, which happens to be Fibonacci resistance, inside of favorable large triggers, to the highest point of resistance, which happens to be a mid-band inside of favorable large triggers. And you guys are going to train your brains to ignore these lines outside of favorable large triggers. Your job is to activate a limit order, a tick or two below the lowest point of resistance inside of favorable large triggers. So put a limit order 1 to 2 ticks below the lowest point and pray. You've done all you can do. It's either going to come back and get you, or the market's going to continue without you, and you have zero control over that. But if it pulls back to your limit order just below the area of resistance inside of favorable large triggers, you're now in a long or a short trade. You're in a short trade with odds favorable momentum defined by the large chart. You're in a short trade with no terminations, and you have an area inside for entry. Guys, your 3 advantages have come to fruition, and this is your highest probability trend trade, guys. This is the best of the best. A 3-part process, momentum, clear path, and an entry area, putting you into the market into a trade that typically wins 70 to 80% of the time. The trade that creates confidence from the memory of success. So for a long trade, it's the exact opposite. You're going to wait for the reversal bar. And at the time of the reversal bar, draw a picture if you need to from the top line of your triggers to the bottom line of your triggers. This is not your window of opportunity. This is the area where the market is likely to continue. So from there, you're going to refine it from the highest point of support to the lowest point of support. The black box represents, let's do this. This is easier. The white shaded area represents the point where the market is most likely to continue. Your job is to do nothing more than activate a limit order right at the top of that window, and this becomes your entry for the highest probability trend trade. Big game, Jim, who else is new in here? Guys, does this make sense? And on the spreadsheet that I gave you guys, there's your entire entry sequence on the 3rd tab. Let me put this in the classroom for you one more time. That breaks it down step by step. But guys, this becomes your highest probability trend trade. And if the market comes down and reaches your limit order, you're in a long trade with all those advantages. You've created a window, which means I want you to be ready for the market to push beyond that highest point or that lowest point so that it's still inside the window, the advantages are still present, and you may see trades go against you a couple ticks, guys. That's normal. And then finally, one of the biggest advantages of Nexgen is when we can identify where the market is likely to continue, we can also identify where it shouldn't go. And that's where stop placement comes in place, guys. This is where we protect our trades, where we protect our assets. And if for some reason, God forbid, that market pushes beyond the window of opportunity, 3 to 4 ticks below it here, we're going to exit the trade. We're going to get out of there. And we're going to say to ourselves, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. And this becomes a cost of doing business. And if you don't wrap your brain around the fact that you will take losers from time to time, losers are going to kill you. But if you take this trade and you enter this market and you understand the advantages that are present, it becomes easier and easier for you to take. So your job is to scroll back the way we did here. And if you see odds favorable and a clear path, circle that tail, guys. Historically, we don't trade tails. We trade pullback to support. But do you see? That becomes your high probability trend trade. There's the small breaking above the large after a termination. This represents an opportunity to take a trade to the upside. There's another tail with odds favorable, and sure enough, another pullback directly to support inside of favorable large triggers. You can scroll back 10 days on any market. You can do it on crude oil. You can change gears and go to the NASDAQ and see what happens. You can do it again and go to the S&P. Was there an opportunity? Did I have all the momentum that I look for? Did I have that path? And what did it look like? Did it give me an opportunity? Well, it sure looks like it did. And it takes you right up. And then the same thing on the other side, guys. All we're doing is learning to trust a methodology. All we're doing is we're learning to recognize in the moment so that we can begin to take advantage. And then once again, there's that momentum and everything says down. It does bounce off of resistance. And then big game, do you see the third divergence in the same location? Gives you an opportunity to manage out of that trade. Gives you the opportunity to take some profits rather than hoping it pushes down. So everything revolves around chart reading, guys. You may not be the best chart reader on day one. By the end of the first week, 7 days with me, you're going to be able to understand the key concepts. You're going to understand where the market is likely to continue. That becomes your entry for the highest probability trend trade. You're going to understand where the market is likely to go using Fibonacci. And then you're going to be able to whittle it all down to take an entry where the market is most likely to continue. And you're going to do it with 2 charts. You're going to do it with 3 rules. And I'm just going to have you focus on entries for 20 days, guys. That's it. Focus on the best of the best. And I'm going to give you some tools, some couple things to help with that. This is the high probability trend trade checklist. This is designed to get you into the market. This is designed to give you something to write on your charts every time you see a trade. So if you go back and circle that tail, go through this. You won't have to say, hey, Mark, is this a trade? You'll be able to say, hey, Mark, look at this trade. I had odds favorable. I didn't have a termination, and I had an area inside of favorable large triggers. And then was it a termination that created the reversal before? If it was, that's the best of the best. If it wasn't, you'll be able to use those divergences to manage. I've never had anybody in the history of this checklist be able to mark yes for each item and do worse than 70%. And let that swirl around in your brain for a second. If your goal is really to make money, doesn't it make sense to give yourself an advantage? Because I'm a visual learner, I put the exact same checklist together, but what I did is I took pictures from the user guide. Is the market coming from a good top or bottom? Is it coming from the termination that creates the full reversal? Is there odds favorable momentum? And it breaks it down. Notice everything's the same color, the separation. This is my best look. When they get back inside, anything can happen up or down. So I'm going to study this each morning as a brand new user. The idea for termination conditions. If I reach the area and none of the triggers break, I know to sit on my hands and do nothing. If the small and large break through, I know the area is broken. I have the potential to continue in the direction of the trade. This one even gives you the third scenario. Because strong triggers break things, momentum is a huge advantage. And when the small triggers get above an area, but the large triggers haven't, or vice versa, this area has the potential to break because of the momentum. On the plan I'm about to give you, we'll talk about a scenario where you can take advantage of this, areas with the potential to break. And then here's your window of opportunity for both long and short, breaking it down sequentially. The reversal bar starts the pushback. The limit order goes just below resistance inside of favorable large triggers, and we ignore these areas because they're outside of the triggers. The reversal bar starts the pullback. Our window extends from the highest to the lowest point of support inside of favorable large triggers, and we don't give this blue fib any attention because it's outside of the favorable large triggers. So guys, this is a checklist that you can study each morning as you go back, or that you can as you scroll back, looking for these opportunities, see if the rules were met. Look at them visually, right? And I'm curious, if you took the entry with odds favorable momentum and a clear path, your third divergence takes you out of the trade. And look how it begins to push the market the other direction. Pretty outstanding, isn't it? That you can identify this, that if you got in long here, you knew to exit that trade, to not hold because things were changing on the smaller, faster chart. I think it's pretty freaking outstanding personally. And then finally, the KISS plan, guys, the Keep It Simple Sunshine plan. Thank you, Bobby T, for the sunshine. One of the smartest things that was ever said to me, or it's not, maybe not the smartest, but one of the most impactful things that was ever said to me when I was a new trader was by an experienced trader, somebody that you guys will see over in Traders Chat all the time. And he told me, if you don't have a written plan, then you simply don't have a plan, and you leave yourself open to emotion, to fear, to greed, to all the things that ruin traders. So he said, write a plan out, Mark. Write a plan and stick to it. Commit to it. And what I'm doing for you guys here is I'm giving you a plan because as you learn to read your indicators, you really don't have the reps to write your own plan. So this plan is a stepping stone. This plan is not the end all be all. This plan is a stepping stone in your learning journey, and it's designed to optimize your chances of success with a high probability trend trade or a 50-50 trade as a new user. The 50-50 trade is that area with the potential to break. It's going to be through simulation, through study, through class feedback, and your continuous practice, guys, that you're going to create your plan. And your plan may simply be, I don't know, instead of this one, go in. This is my plan. There we go. There's my title. This is my plan because I want the best of the best, right? I want the trade that wins more than it loses. I want the trade that's designed to give me the best chance of success. And this is a simple plan for consistency, but your ability to read your charts, your ability to read the indicators, your study, your practice, guys, you're going to see things that just click with you, that just resonate with you. And that's going to become your plan ultimately. And the simple plan for consistency is never fight the large chart direction or the triggers, guys. Don't trade short trades against a green background initially. And there will be times when you may, like we talked about earlier, big game. But don't do it initially while you're learning to read your charts. And don't fight the trigger lines. Don't fight momentum, guys. It's like playing in traffic. You're likely to get run over. If you keep this in check for your first 30 days, it's going to eliminate 50 to 60% of the trades that new users typically take and lose. And all you're going to do initially is define your entry. And I want you guys to remember, all you're doing is defining an entry. All you're doing is getting into the market when these conditions are true. A couple weeks focusing on nothing more than entries, guys, is going to give you the advantage of very tradable scenarios, very manageable scenarios. And once you're in, The same mechanical, pragmatic approach to entry you took, I've created the same management scenario, the same way to manage without emotion, without fear, so nothing more than if then. And your management plan, this very simple, basic, remedial, going to advance a lot as you learn to read charts plan, begins with great entries inside of favorable large triggers. And this is the basis for everything, is getting in at the right spot, which is why just focusing on entries is such a big deal. Don't put the pressure on yourself to be successful in the first week. If you want to put pressure on yourself, put the pressure on yourself to post your entries in the room so that we can talk about them. Where the market is likely to continue, your initial stop goes where the market shouldn't go. And at this point, I am 100% powerless, guys. It's either going to hit my stop or it's going to give me a reversal bar. And if it gives me a reversal bar in the direction of the trend, in the direction of the momentum, in the direction of my trade, I'm going to reduce my risk 2 ticks above that reversal bar. In a long trade, 2 ticks below. So great entries, stop where the market shouldn't go. If I get a reversal bar, then I reduce risk. And once again, this is where I sit on my hands and I say to myself, I'm not in control of the market, but I have the advantage of momentum. I have the advantage of a clear path, and I've just gotten in where the market is most likely to continue. They're going to have to come and get me. They're going to have to come to my stop. I'm not going to move it arbitrarily and make it easy for them. And then at this point, you're either going to get stopped out, normal part of a positive equity curve, or it's going to hit your first target. And this first target, for you home run hitters, is a source of frustration because you're thinking to yourself, this is only $100, Mark. What the hell can I do with $100, right? This target isn't designed to make you rich. This target is designed to create confidence through the memory of success. This target is designed to make you feel good and to begin to trust the methodology that gets you in. This target is only $100, but you're going to hear NinjaTrader tell you that your target was reached. And that's going to create dopamine and serotonin, and you're going to be excited, and men are going to want to be you, and women are going to want to be with you, and children are going to sing songs about you. And at this point, you feel outstanding. And you're going to move your stop to break even, which I'm not going to lie is chum in the waters, and it's going to get hit a lot. But the idea that you have absolutely no risk, that you have money in the bank, is going to make it easier for you to sit on your hands and do nothing and see if it hits that second target. And remember, it's likely to hit the second target because you had the strongest trigger look possible, because there was absolutely nothing in your way, and because you let it bounce off of an area inside of favorable large triggers. And the second target is only $200 away, guys, and that's a $300 trade. And again, $300 trades don't seem like big trades, right? How am I going to be a millionaire on $300? Well, guys, $300 a day, and I just want to break this down for you, is a $1,500 week, which isn't a bad week. But that becomes a $6,000 month, right? And a $72,000 year based off of that $300. And then, Cav, you're absolutely right. What happens if 2 goes to 10 and I take that 72,000 and I just add that 0 on it? But even more so, when 2 goes to 4, you're at $250,000 a year, guys. So the idea is to have a plan that gives you the highest chance of success, to have a plan that provides you a statistical advantage every time you enter the market, to have a plan that has been proven, that you can trust, that you've back tested and studied, to have a plan that focuses on advantages. And then from that plan, keep practicing it until it looks easy. Smalls were below the large. Everything was pushing down. Multiple divergences said, get the hell out of that short trade. That's just basic rules. Weak triggers, and look at how far it pushes. But notice that it pushes to support with all the trigger lines above. No short trades, ladies and gentlemen. Rule number 2 keeps you from guessing and hoping. It keeps you from taking that short trade directly into the blue line. And we could do this all day. Price reaches resistance, absolutely no trigger lines have broken through. Therefore, no long trades, no entries at the mid-band, no loss of money. And how is the mid-band utilized on the large chart? Outstanding question, Alinsky. 9 out of 10 times, it doesn't do a darn thing. Um, True story. 9 out of 10 times, the mid-band is of no concern to me on the large chart. When is the mid-band a concern to me on the large chart? When my triggers remain a full bar away. And this is an instance, Alinsky, where the gap theory comes into play. And let me show you guys what the gap theory is. So if price pulls away from the synthetic triggers, those large triggers on the large chart really fast, and smacks into an area, whether it's Fibonacci, whether it's a mid-band, it's likely to snap back to the large triggers. So a mid-band on your large chart, if price comes in contact with it, and the large triggers remain a full bar away, meaning that I can make an entire reversal bar to get back to them. And I'll use the reversal bar marker on my large chart to determine that. If they're above the reversal bar marker, then the gap theory is in effect. My mid-band is a termination condition. No more short trades because price is likely to snap back. If it hits Fibonacci, large triggers remain below the reversal bar. Once again, it's like a vacuum sucking back to it. Same thing here. Price reaches Fibonacci resistance. See how the large triggers are below the white line? It's likely to snap back to it. It's likely to close that gap. And there it is after the fact. Price accelerates, hits a mid-band, hits fibs. See how the large triggers were all the way up here? You guys knew not to take a short trade into that area. Alinsky, I think we just saw it in whatever market I was just looking at. There you go, guys, on crude oil. Price accelerates, goes right into that fib. Look at the gap back to the large triggers. It keeps you from hoping that that mid-band holds because it's like a vacuum and it's sucking you all the way back up to the large triggers. Is the market going to go up or down from here? I have absolutely no idea because my triggers are green and my background is red. And it's when they look like this that I've got an advantage. Does that make sense? So guys, the gap theory will help you identify when a bigger retracement is possible. The gap theory will help you identify, let's see if we can find a couple examples of it. When a mid-band is likely to hold, look at that grind. This was Friday, guys. Look at rule number 2. Bing, bang, bing, bang, bing, bang. Never get caught up in it. But Alinsky, there you go. There's your mid-band. Large triggers a full bar away. You knew not to go short. Mid-band, large triggers never blinked. You knew not to go long. One-to-ones, mid-band, large triggers a full bar away. It closes the gap. So great question. It just becomes a patience piece for you. So guys, this is the first hour, every hour. Talking about advantages, trying to get you guys to a point to where you embrace the idea that once you're a chart reader, things work out. Once you're a chart reader, you'll be able to gauge where the market is likely to stop. There's one of those bounces again, straight up to resistance. None of the triggers are through, guys. Great question, Craig, or great comment. Let me show you exactly what I'm talking about. So odds favorable momentum. The gap is between the small and the large is what we're looking at. Does that make sense? Let me take this off of here. Let's just look at momentum, 100%. So there's two separate entities that we're talking about here. We're talking first about strong trigger lines, which is momentum, and that happens when there's a separation between the small and the large. Does that make sense? That's rule number 1. Cool. And then the second idea that we were talking about is one that gets us into termination conditions. And termination conditions is going to be that concept of if price accelerates away from the large triggers. So the first one relies only on the triggers, the separation between the two. The termination condition revolves on price reaching an area. Remember that recipe, if price reaches the area, that has to happen first to determine a termination condition. And the large triggers remain a full bar away, then price is very likely to snap back to those large triggers. So the first one is visually momentum, is taking the idea that the separation between triggers is likely to push. And then the second concept is that when price accelerates away from the large triggers, see how the small and large are separated? That's a good look, right? But because it reached an area, price reaches an area, no more short trades. Because we reached an area and the large triggers are more than a full bar away, we can say that price is likely to close that gap. So even with the odds favorable momentum, rule number one's in place. Rule number two says don't try it. Don't try that short because it's likely to snap back to those large triggers. And then if we go back to crude oil, small's below the large, we see it right here. But because we reached the area and the large triggers didn't follow, this is textbook termination. It keeps you guys from looking for that short trade, getting sucked into the idea that the small's below the large, that the background is red. Rule number two says, Craig, it's financial suicide if you take this short. And it's recognizing the pattern. It's recognizing the pattern that acceleration away from the large triggers is likely to close if you've reached an area. Does that make sense? And thank you for asking that question because there's probably 10 other people that are like, okay, thanks, Craig. I owe you one. So the 13.2 has to show the green, red, strong triggers in order. So what we're looking for, big game, is that's the first part. The first part is strong triggers, right? Watch this. Boom, boom, boom. Great questions, guys. Thank you so much. Let's do kind of order of operations. If the background is green on the large chart, I'm looking for the strong triggers. Small's above the large, space between the two. If the background is red on the large chart, I'm looking for the small below the large, right? So identifying the direction and then making sure that I have strong triggers. So that's rule number one. Are you cool with that? And then once rule number one is met, the only way to have strong triggers, so let's do just 1 and 2. Let me see how big I can make this. The only way I can have strong triggers is if the triggers and the background color match, right? So in an uptrend, small's above the large, there's my momentum. Small's below the large, there's my momentum. This is rule number one. Are you comfortable with that? So if I minimize, there's rule number one. So once I have rule number one, remember it's an order of operations, then I go to rule number two. So you skipped rule number two in your question. Once I have odds favorable momentum, you see it right here. I have to make sure that I have not reached a key area. I have to make sure that I'm not trading into an area that has the potential to stop the market. So it starts with just red or green, and then it goes strong. And if I have strong, I'm looking for clear. And then if I have clear, then I'm looking for the entry on the 5-1 for the high probability. So first, let's get all our cheaters off of here. And let me line this up with the small chart too. First, I look for strong, and the only way to have strong is if everything's green to the upside. Once I have strong, I want to make sure that I haven't reached an area. That gives me the clear path. That's rule 1 and 2 met. And at this point, big game, exactly. Once I have odds favorable and a clear path, I'm done with that one. Now I turn my attention to the small chart and I wait for a reversal bar. And there it is. And at the time of the reversal bar, I'm going to identify my favorable large triggers. My large and synthetic are overlapping one on top of the other. But even more so, I'm identifying the window of opportunity, which is from the highest point of support to the lowest point of support inside of favorable large triggers. And do you see how that's it? Just a mid-band big game? So my job is to put a limit order a couple ticks above it because this is where it's most likely to bounce. And as the market pulls down, see how that moving average moves up? You may need to adjust to stay a tick or two above it. And then the market pulls down. My mid-band's still coming up. I'm still a tick or two above. It's getting close. Maybe I go up one more, right? Give it a 2-tick gap. I don't want to trip over pennies and miss dollars. And sure enough, it hits it right there. It's about 2 ticks above the mid-band, and it heads in the direction of the trade, which means that my stop, while it was outside of the window of opportunity to begin with, now it's about 2 ticks below my entry. I've got literally 2 ticks of risk getting in at the bottom tick if I caught this one, and it rockets off, right? So the large chart said my advantages are present. Large chart said that my path is clear, everything is up. Small chart told me where to get in. And if you look at where that box is, it lines up with the bottom of the tail. Does that make sense? This is your entry. And this is what we go back and study every day, guys. This is what I talk about for the first hour, really the first hour and a half every day. So notice how the triggers are green, but the background is red. So there's no way for me to have odds favorable momentum, which means I'm just not sure whether it's going to push up or whether it's going to push down. Notice how my synthetics and my large aren't trending one on top of the other, right? I've got 2 divergences down. I've got a split between the triggers. They're flat, they're lifeless, there's no momentum. This is a great opportunity because neither rule 1 or 2 is solid. Let's just sit on our hands and wait. Let's see who's going to win that fight because eventually someone's going to. And the small are going to get above the large. And the large are going to begin to turn. And we may get one of those tails. This bar is still forming, but do you see how at least the initial bounce came right off of support inside of favorable large triggers? But, oops, that's not what I wanted to do. But if I put the indicators back on, whoops, if I put the template back on, let's see if my large chart had an area of resistance, if it had one-to-ones, if it had something that told me that I shouldn't be going long because rule number 2 is not met. And this is a great example. Look at that, directly into the divergence high, directly into the termination condition. And look how it pushes back further, right off of that area that can create a bounce. So that was a great example. Momentum itself isn't the recipe, momentum in a clear path. And eventually, momentum pushes. But we're going to piece it all together. We're going to make sure that you guys can identify them individually so that you can piece them together. Price reaches yellow one-to-ones. See how the large triggers are below the reversal bar marker? Does everybody see that? This is that gap theory that we were talking about. It's never guaranteed, but it means that price may come close the gap down to these large triggers. And we'll see what happens. It may not. But it gives you a little bit of a safeguard there. And then there's crude oil, the same look, right? It's just, who knows? I don't feel good about going long or short because I don't have advantages. And guys, this is what we talk about first day every day. So if you're brand new, use the checklist. Go through and use the checklist, and I'm going to give you it again. And then when you're using the checklist, um, write those things on your chart, right? I'm not sure what all I gave you there. Okay, I gave you four. So I gave you the checklist. I'm giving you the visual checklist. And then I'm giving you the KISS trading plan. And then all you have to do at this point is tell yourself that I'm full of beans, that this shit never works, pardon my French, and go back and back test it. Circle those tails. Write the rules on the chart. Create recognition. Take pictures. Simulate. Simplify, right? Fill up your spreadsheet, guys. Take as many pictures as you can and get to that point of recognition. Every time you take a trade, every time the rules are met, and then just go back and click and study on these. And I'm telling you, you'll get exactly where you want to be. Anybody can do this. Everybody does it at a different pace. But the key to success, I'm not sure if I've mentioned this, post your trades in class, guys. Let me see what you're doing. Let's talk about what you're doing well. Let's talk about what maybe you're struggling with, and let's work together to get you exactly where you told us you wanted to be. So, with that said, I'm going to go refill my water because my throat is dry. Take a second, stand up, stretch your legs. If you have a question, I want you to post it in the room. If you posted a chart, we're about to go take a look at your charts, guys. And when I look at charts, this is so important. I don't judge you on the trades that you take. I relay them back to advantages, right? It doesn't matter to me if you take a high probability trend trade or a medium probability trend trade or a momentum trade or an HVA trade or a counter trend trade. I'm going to relay everything back to advantages. And what you'll find is that when you get rid of two advantages, trades are less likely to win, right? If you lose one advantage, you can manage typically when you learn to read your indicators. But if you give away momentum and a clear path because your small chart looks good, they're probably going to take your money. So everything that I look at, I'm going to relay back to the advantages. And when I come back, we're going to start that. I'm going to click on everybody's charts. We're going to look at the live market. The first half of class is a lecture. The second half is driven by you guys. So if you're sitting there wondering what the hell's going on, it's your job to post in the room to tell me because I can't see your faces. I'll be back in about 3 minutes. All right, my legs are stretched, guys. Let's get into the pictures. I'm trying to make the first hour last a little longer, trying to keep it more basic because it's important to me that you guys focus on your chart reading initially. Um, Now what I'm going to do, and I'm going to show you how I do it, is I literally I'm going to scroll to the top of the chat box, guys. I'm going to start at the beginning of the day, and we're going to look at everything that you guys have done. And I'm going to tell you right now that analysis after the fact is easier than analysis um, in the moment for new users. So it takes a minute. It takes a minute for you to go through repetition to get comfortable with what you're looking at. And let me see where we're at. So what is today? Today's the 13th, huh? Joel did some study yesterday and put it in here. So let's take a look. And guys, you can post stuff from your replay, right? So odds favorable momentum, absolutely. Smalls above the large coming from a termination condition. You can see that he's writing his rules on there. He says clear path. I see running directly into yellow one-to-ones. For the brand new user, for the person that isn't comfortable. Guys, this is a rule number two not met, 100%. For someone of Joel's caliber that's been reading charts as long as he has, he recognizes that when a termination creates a full reversal, gives that much momentum, and there's no divergence on a pullback, he can take an opportunity to trade into the area. And you can see that the area ultimately holds, right? Terminations for the win, and that happens a lot. So make sure that when you're annotating that you're actually going through and annotating honestly with yourself. Odds favorable momentum. The smalls are below, the large are down. And area inside of favorable large triggers. Well, your area was all the way down here. And then you got in. I'm not sure what your entry was, but it's beautiful because everything says down. And sure enough, the market does go down. It just, with the weakness, with the divergence, it pushes up to the higher area to make it happen. Truth in advertising, guys, is so important. Smalls get above that divergence high. The momentum is great. Two divergences print. And it's sure enough, it doesn't work out. And Joel realized that. And this is what playback is for. Guys, I think that breaking rules is probably as important as following rules in the beginning because it gives you the opportunity to recognize that your rules do in fact work, right? So one more time here, Joel. Smalls below, but the larger up, right? No divergence, beautiful pullback, but it's not favorable large triggers. Your synthetics are still up. They're still green. But you have enough advantages. This termination ultimately reverses the market, gets that momentum cranking, and you know exactly where the market's likely to continue and you take advantage of it. And it was beautiful. But it's not favorable because they're not in the same direction, right? So that's your little hitch, but your chart reading gets you into an outstanding trade. And this is one of the most important things for me. In the beginning, make sure that you're using the words from the rules as you get into it. And what you're going to find is that the looks become easier and easier to recognize. And Joel, that's outstanding trading and chart reading on your half. Even the ones that didn't work, you're gauging advantages. And then Cav, big game. This is an example. And actually, I think this is the exact example that we talked about, where you may not wait for it to go green on the large chart because that termination and the multiple divergences on the small chart gets you looking for a small chart momentum style entry to get you up to the next areas. Cav, that's nice execution. Um, and if I may just be a little nitpicky because I know where you're at. See how the smalls get above the large there? It's a matter of 35 seconds. Um, because as long as the smalls are inside or below those large triggers, it may roll, right? Especially with what's going on above it, it may roll. But letting the smalls get above the large and then grabbing that little stab back, it heightens the advantage just a little bit. It's a little patience piece. I'm gonna tell you guys right now, you're gonna see terminations, and the average new user is gonna get in right here and get stopped out, and get in here and get stopped out, and they're gonna miss the one that gives the highest chance of success. Not a high probability trend trade, but a beautiful execution based off of a termination. Nice job, Cav. And I lost my place on my way back. And this is all we're doing, right? We're looking at advantages. We're looking at ways to do it better. This is, I'm not going to lie, for lack of a better term, this is a sexy trade. There's that termination. That was your first trade. And then when everything is screaming up with momentum from the termination, look at the pullback. Right to support, right inside of the large trigger. Rockstar, Cav. And at that point, let's take a look. Your first entry was what? 10. So you made 240 and 480 and then another. Your day's done, dude. You're on the golf range. You're on the golf course at this point. Those moves right there. And what's the time gap? 15 minutes. In 15 minutes, you hit most people's daily goal in 2 trades. I was having a talk with someone this morning. Guys, there's no reason to work every hour of every day. There's no reason to work 300 days a year. Just do it well. Gary, same trades. Everything says up, snap back, get paid, snap back, get paid. And then the multiple divergences, you say, you know what? That's not as pretty as it used to be. I'm going to hold off. I like it, Gary. Great looks. Great trading. Everything says up, and I'll be darned, it goes up. There's a lesson there. I don't know. I didn't even look at it, Dwight. Probably crude oil, if I'm not mistaken. Probably crude oil, based on the price. Whoops. But it doesn't matter, right? Because it's the patterns that we're trading. And then Jose, there's that good bottom. There's your 50-50. It gives you a clear path. CL. Oh, you were asking what it actually is. CL is the crude oil symbol. And guys, this is the market being a jerk face. Jose, you have a termination that creates a full reversal. That full reversal gave you odds favorable. The odds favorable gave you a clear path. The clear path gave you a pullback to support inside of favorable large triggers. And it's a cost of doing business. And there's nothing more frustrating than catching the losers. But that's exactly what this is. You had every advantage, and it just didn't work out. And I'm not going to lie, I would take that trade too, and I would lose that trade, and I'd feel okay about losing that trade. And I'm surprised that there's not more people showing me that trade in the room, because that was an outstanding look. Alan, you took it as well? Yeah. And then Cav, 50-50 trade. You got in late, and the trigger's above the blue fib. With the large trigger above the blue fib on the 13-2, should have waited for the trigger move. So, Cav, this was gap theory. Do you see it? You reach Fibonacci support. The large trigger was a full bar away. And sure enough, it closed the gap right to it. Do you recognize that after the fact? Yeah, and if you got in right at the mid band, it gave you a little management time. Where are your synthetic triggers on the small chart? Are you not using those on purpose? And it's okay if you're not. You do you. Refresh all historical data should put them on there. Try to reload the template. I find them helpful because what you would have seen, Cav, is you would have seen up here around 37, you would have seen those synthetics up a little higher, and you would have seen that division on the 50-50. And just visually, it might have helped you a little bit. It's the right idea, but because it's not coming from a good top, because it's into that support, because the large triggers are a full bar away, that's a good one just to keep on the sidelines. And then GWC, termination, there's your reversal, everything going up, and sure enough, it pulls back to support, and you take it right up. Beautiful trade. Nice trade, GWC. RONC, all the momentum, clears, tons of momentum, base hit. Same same old trade. $100 on a four lot. $400 in what is that, like 18 seconds, Ron? Guys, if your goal is 250 a contract, Ron just showed you how to do it in a matter of seconds. Not a high probability trend trade. And then GWC, you hadn't reached the area yet, so you take the pullback. Getting it a little bit high there, not waiting for support, but you know exactly where to get out. Nice one, GWC. Way above the area inside of favorable large triggers, though. Just a little extra risk on the trade. You just weren't willing to miss it with all that momentum. And then Joel, everything says down, pulls back to resistance inside. There's your entry target here. Nice one. You should feel good about that trade. That's solid. Nicely done, Joel. And then Jim and Big Game, and who else is in here relatively new? Um, how are we feeling? Right now, we're just watching Nexgen users use their software, read their charts, talking about advantages. I want you to feel comfortable. If you have a question about someone else's chart, please, by all means, um, ask a question. Don't hold back. And then Jose to P. I love it. Everything says up. Beautiful, Jose. Isn't it awesome? You took the perfect trade and they stopped you out and then they just gave it back. And that's kind of day trading, guys. And then Cav. Oh, holy entry, Batman. You take the long entry. Little bit late on the move, I would say. Early pullback on the 13.2. Should have waited, still won. Yeah. Because you knew where your stop should go outside of the window. You just had to sweat a little bit. Hey, Alinsky, thanks for being here, man. We'll see you soon. Do you have any charts I need to look at before you split? Good? Okay, cool. Have a great afternoon, bud. True story, Cav. This is where I add on that close with this look from this termination. Um, Small trigger said be patient, and I know that you were looking for the close on the correct side, right? Here it's a little more manageable. Here it's triple dog dare you to keep me out of it. This is where I go from 2 contracts here to 4 contracts here and carry them up like you did. Beautiful trade, dude. Beautiful trade. Everything says up, the market tends to go up. Everything says down, the market tends to go down. And then Joel, that gap theory got you. I remember you said that you fell asleep there. Isn't it? So I want to point out a couple wonderful things about this, and this is for my new users. First of all, is Joel posted a loser, and I don't think there's anyone in this room that's like, Joel, right? Because we've all taken this loser. And then it also, his loser creates a great lesson about the gap theory. And because he had the courage to take it, because he had the courage to post it, and because he was smart enough to keep it on sim, all he's going to do is be a better trader because of it, because he's looking at it, he's getting the feedback, he's talking about the gap theory. Guys, I'm telling you, it's not your winners that make you great traders. It's seeing everything, taking the loser so that you can understand how not to take the losers. And then Cav, three divergences, price bar more than one bar. Um, I'm trying to read it all, Cav. It's a tough one. Three divergences. So termination creates the full reversal. It pushes up, the sellers push down right into a midband. That's this impact here. Um, man, on the Nasdaq, Cav, I feel like you got lucky on this one. What happens right here at 19? At 19, see where everything goes green and it starts coming up? That's a little less assertive than everything below. Oh, but that's a large chart scenario, right? Um, it's not over here because here your trigger lines dissect the middle of the bar that goes up. Does that make sense? Over here, potentially, there's a full gap back, but over here there's not. And the gap theory's here. The gap theory isn't here. The gap theory happens on the large chart. Does that make sense? Here what we have is a midband that we hope holds with the smalls below the large and flat, but everything is down here. This is the first indication of some immediate momentum with the smalls going up. And then where the smalls start to get above the large, I don't have any rules for the 5-1 gap. So, but if the rule was on the 5-1 gap, what kept you into above the gap? I think you got lucky, my friend. I really do. And that's okay. And then look at this one where the smalls break above and it snaps back. There's maybe a potential to get in, or even right here where they're super strong and see how your large turn. And by the time we get there, look on the large chart, right? Again, patience. I think you could have taken this bar as easily as that bar, and you didn't for some reason, and it comes back. So I hate to tell you guys I think you got lucky, but I think you got lucky on this one. I think it's just a little bit aggressive. Um, but you pulled it off. Nice job. That's the one that if I take it and go live, they take my money from me if I try it again. And then for Jose to P, that's the trade, guys. What about two divergences above the blue fib? These two? 1, 2? Because one's below it, right? So, Cav, you're telling me that this second divergence was an indication to you? Made you feel good about it? And this second divergence got you into the market 10 bars before it? Really? So you knew that this divergence was going to print when you got in 2 minutes before it did? Magic 8 ball. I see what you're saying. So if you're in Cav and this prints, it makes you feel better about being in, absolutely. Right? But yeah, you didn't know anything about that yet. So, yeah, that's okay. Guys, lucky feels good sometimes. I've gotten lucky. Anyone tells you that they don't get lucky every now and then? Yeah. Well, and if you go back to it, Cav, there's your second higher divergence, right? But even that hadn't printed yet. So you had divergence from down here, and then everything's above blue fibs. Um, and you get the second higher one here, right? There's that second print. And then just let those small triggers at least give you some momentum. Have something pushing in the direction of your trade instead of everything potentially down. And I think this is where the advantage comes in, right about where that next one prints. This is where I start to go, wait a minute, I'm kind of digging it. I think you have the right idea, maybe just a step or two too soon. And then Jose to P, this is for you as much as it is for Alan sharing. Everything says up, the path is clear, the entry's perfect, and it just doesn't work. And Jim and Big Game, I want you to see this one too. This is a trade that typically wins 70 to 80% of the time. What you're witnessing is that 20 to 30%. The more you trust, the more you see, the more you practice, the easier it becomes to take that next trade. And what you'll notice is that Jose took that next trade and got paid. And that's one of the biggest lessons. When this one doesn't work, do you have the ability to take the next one? Do you trust the methodology enough to take the next one? And that's hard to do sometimes. And then Shogun in Technicolor. Let me see if I can figure out what we're looking at, Shogun. Termination on the S&P large chart. This chart says up. This chart says up. This chart says up. And it looks like you went long into resistance a couple times and then got stopped out on the pullback back to support inside of favorable large triggers, but realized, wait a minute, if I just sit on my hands and wait for the best trade, I have advantages. Well, it looks like you traded directly into a lot of areas that you weren't sure if they were going to break, and I may be wrong, but if this is your 13-2, and Shogun, I know you look at a lot of different things, right? You're an information dude. What if hypothetically, you didn't trade into areas that may hold, but you let them break and you take that entry right at support inside of favorable large triggers to look for the next area where your profit target is, right? Because these you made a couple ticks or maybe break even. Or if you're gonna do it, you've got to use that idea of where the market isn't likely to go. Where is it not likely to go when everything looks like this? Well, I have to keep my stop down here. And if I put my stop at support inside of favorable large triggers, it's likely to get hit. Does that make sense, Shogun? So I like the look. I love this one, but if you take this one, let me see if I can make this bigger. If you take this entry, see how your stop is at support inside of favorable large triggers? So you make 50 cents. Your commissions don't cover that. But if you eliminate the maybe and embrace the crap out of the definitely, you could have been in at 17, the same price, right? The exact same price. And up here, you're up 5 points per. And this is such the patience piece. And Shogun, I think your read was outstanding. But I think what you'll find is if you keep it simple, it has you in at 18 flat, which means that at 22.50 on 10 contracts, you're up about 3 grand as opposed to $950. That's pretty significant. And you also have virtually no risk at this point. You're break even. There's nothing in the world that could go wrong at this point. Does that make sense? You good with that? And I'm not knocking your trades. Everything says up. But man, I really feel like you could eliminate a little bit of stress and embrace some advantages. Crude oil's struggling a little bit, isn't it? And then the S&P, there's that 50-50 on the divergence high, and if you took it, it gave you a reversal bar and told you to get the hell out, right? Small loss, some of you may show me there. Not a high probability trend trade. Awesome. I learned from you too, Shogun. And here's that S&P. And I believe this was your entry, right? Are you missing a lot of fibs that I have? Let me look at your large chart. You have all those, 22. I've got one from the 5-1 that you don't seem to have, but of course I'm on 7 and I've destroyed my charts 1,000 times over. I love that entry right there. And then we've got the potential to break and a couple divergences. Solid trading. First bar up, then you don't have to guess the pullback. I get it. So the idea on the breakout, Shogun, is you have to let it break out, right? And a breakout means that you get above the fibs. And let me show you an example of what I'm talking about. Maybe I can be helpful, right? So the breakout says that we have to get below the fibs. That's what's breaking out of the area. So check it out. Not really a good example there. I'm going to try and find. Let it get past the fibs and then pull back to the fibs, and it gives you a better chance of success, right? And if this one doesn't work, if the momentum dies and it pushes up, well, it pushes you right to resistance inside of favorable large triggers. If you watch Sophia's trades, part of it is letting it get to the other side. And I'm looking for a good example of a breakout. Let's go back to 944 real quick. And this is crude oil. That's not really it. This would be an example of the fib getting above it and then pulling right back to it with the right momentum. And that's a great momentum breakout, right? Price gets above and pulls right back to. That's your immediate momentum breakout. But letting it clear the area pays huge dividends. Even here, it breaks up, pulls back, and then when you get that second divergence, that's when you wait for the trend trade. Great stuff. Smalls are up, large are down, lots of divergences, triggers don't match. Breakup. So, and what you're looking at there is a momentum style trade. Let me see if I can find it in the user guide. Bum, 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 bum. Trying to find one of John's. Why? So Shogun, here's one of the great things, man, is the user guide's designed for new users, right? The user guide is designed to build a foundation. Write a plan for a breakout trade. Show me 100 pictures of it. Show me that it wins 80% of the time. Shit, I'll get John to put it in there. But the problem is breakout trades don't. Breakout trades aren't high probability trades. Well, it depends on what you're doing, Shogun. If you're waiting for a pullback to an area of support inside of favorable large triggers, it's pretty damn easy, right? If you're trying to trade every pullback, well, then you're looking at for too much stuff. You're trying to take every move, not the best move. You know, there's your pullback to support. There's your pullback to resistance, but it didn't have a clear path. So I think that there's opportunities. I like breakouts. I really do. But the conditions have to be right on the large chart for a breakout. And maybe that's the lesson. Maybe that's what I'm getting at here is is if the condition's not right here, your little breakout isn't really a breakout, it's trading into the area. But once the area clears, if you took a long on this stab back, that's cool. That's a good long, right? With all the momentum, price gets above, price pulls back. But here you have a fighting chance. And you have an idea of where your stop has to go because it has to go outside. So if this doesn't work, you know that this is your next, right? You know that this is your next opportunity. And then if you're waiting for that reversal bar, absolutely. Because now the area, there's your break, pull back. This is your trade into. So I think just the English language helps a little bit on this one. In here, you never got a full bar above areas. You never broke the area. And here, we don't have a clear path. I think you were spot on. You had the right idea. And then D-Rock, 50-50. That's a great shot at a medium probability trade. Strong triggers, no divergence, smalls through, everything down. You even had three divergences descending. Beautiful. Just didn't work, brother. That's it. And then Joel, everything says up with momentum. That was your best, right? If you got in here, then divergence on the 50-50 says let's manage out. I love it. And if you don't catch this one, great job saying, you know what? I'll just wait and see. I'll wait and see if it breaks. It has the potential to break, but it's not broken. It's a great chart read, Joel. It doesn't have to be difficult. It never has to be difficult. If you take everything and go back to, I don't have momentum up, so I shouldn't be looking for a long trade. I don't have a clear path down. I shouldn't be looking for a short trade. Let's wait a second and see what happens. I don't have a clear path, but everything says up. I'm coming from a termination on a full reversal. Let me let my small triggers break this area before I think about taking a long. You guys see what I did there? Let my small triggers break the area before I think about taking a long. What's it mean? It means that if it goes up from here, I got to be cool with that. I got to be okay with the idea that a clear path gives me an advantage. And it means that you're just not going to catch every trade, guys. You're not going to catch every tick in the market. You don't have to be successful. Cav showed us that earlier. Cav made $800 or $900 in two little moves. Ron made $400 in one little move. Joel made $300 in one little move. And now we're starting to roll, right? Let's get everything to agree and look for the opportunity. So guys, I've made it through all of your charts. Let's start talking about what you want to talk about. What do you want to talk about? Hey, Cav, are you with me in here? And this isn't just for Cav, but check it out. Termination, termination. Look at when the smalls get above the large, Cav. There's your little spike back. Notice how pretty much everything turned to the upside there. I don't know if you're in the room. Joel, we can all make it hard, man. I don't want you to think that you're alone in that one. I make up rules sometimes. And guys, I still make mistakes. You're going to make mistakes. Do you know what I do when I make a mistake, though? Or when I take a trade that loses? I show it to my brother. I show it to my coach, to my mentor. And I say, man, did I miss something here? Did I take a trade that I shouldn't have taken? Because sometimes I get caught up in the moment the same way you guys do. And I'm telling you, he gives me great feedback just like I try to give you guys great feedback. This morning. Show me a picture, Dwight, and let me see if I can help you. Just show me a picture of your chart. Guys, I took a short this morning and managed out of it. And I sent it to my brother. I said, "What am I missing?" And he goes, "No, you're good." And then I took the re-entry and got paid, managed it, but I gave it to my coach, guys. I give all my pictures to my coach. What am I doing? Am I doing it right? Dwight, you're on 8, right? So you should type in CL 1223. Let's look. CL alone won't do it because you're not telling it which contract to look at. So do CL space 12-23 and let me know how that works. Yeah, CL alone won't get it because you're not telling it to look for the December contract. And let me find a picture. Maybe you can also write December. Alan's picture. I'm trying to find a Ninja 8 picture for you. Alan's on 7 because he's a rebel like me. Let's see if Cavs is. Nope, that's NASDAQ. Hold on. I'm going to get it for you, I promise. Oops. And of course, I can't find one. That's okay. Well, let's get one. There we go. CL 1223. You see it, Dwight? Guys, I have frozen. I don't know if you can still hear me, but I have frozen. There we go. I'm back. I'm back. Cool. D-Rock, I did. And let's go over it again. I basically said beautiful. You had three divergences descending. You had the small below the large. Everything was pushing that market down. You didn't have a clear path, but you had no divergence and a little window of opportunity. And I think that's a beautiful shot um, at taking the 50-50, and it just didn't work. And then when a 50-50 doesn't work, what typically happens? Watch this. When a 50-50 doesn't work, very often, it likes to go the other direction. Pretty cool. All right, so Tony, are you using Capture software or Snagit? Okay, cool. So here's what I do. So if I take my high probability trend trade checklist, the first thing I want to do is make sure that it's not huge, right? I'm going to take a picture with my Snagit. Oh, heck yeah, Ron, go get your chili dog. And I'm going to take a picture of my checklist, and that's going to put it into my Snagit thing down here. Snagit thing down here. That's pretty cool, right? And then from here, all you have to do is, let's say I'm looking for a potential trend trade. If I had a picture of one. Either way, it doesn't matter. So let's say that I'm looking. So Tony, all I have to do is once I have a picture of my trade, right? And then once I have the picture of my trade, I can just click on that and boom, drop it right in. And then if I need to, I can make it a little bigger. Um, and then that way I can go through and I can be like, yes, and yes, and yes, and no, and uh-oh, there's my problem. But I'm going to warn you, and I'm going to give a warning to everybody. One of the things that I see a lot is people just copy paste, right? They just copy paste. And let me see if I can find an example of it. At 9:14, I'm going to see what that short looks like. So what I find sometimes is people will do this and they'll go like this and they'll go yes, 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 right? And this is their entry. And then they get stopped out right here. And I'm not saying that you're going to do this, Tony, but is the market coming from a good top? They start to phone it in. It is not. Oh, put it on your Excel worksheet. Well, shoot, dang heck. Yeah, I got you, brother. Let me go through this because now I'm on a soapbox. Make sure that if you're using this and pasting it on there that it matches, right? Don't phone it in. And then, Tony, finish it. Put it into screencast. So you can take the picture, share it from Snagit to screencast, and get your link. And then once you get your link, so there's two ways to do it. I'm going to show you guys both. If this is your first couple times to do it, just paste the link in there, right? And that gives you the screencast link, and it's in there, but that's not really how we want to do it. We want to keep it clean on the spreadsheet. Go to Insert, and when you click on the link and you go to Insert, I want you to click on the link button. And what this does is this creates the opportunity to make a hyperlink. So if I click and drop the address in there, the same way I'd go to Google or eBay or something like that, I can come to text to display and call it test, and then just click OK, and it gives me that super clear. And what happens, Tony, is when you do that 2 or 3 times, when I right click, it will default me down here to the link. The Excel will memorize what you're doing. And then you can just click the link and it'll set that hyperlink up initially. But you've got to do that one a couple times. Awesome. And GWC, 50-50 doesn't work. Everything rolls. You take the pullback right up to Fibonacci resistance. GWC, that is some next level trading. And it's that little patience piece, right? Let it roll a little bit. Let everything change. Get you in the right direction, and it makes it easier. Nicely done, GWC. I like that look. And notice how it never came from the termination? And they're just trying to finish that move, guys. Fibonacci, where the market's likely to go. Solid trading. All right, let's chart read the live market together, guys. So this is crude oil. The background is green. My large triggers are green, my small triggers are green, and there's separation between the two. Give me a Y in the room if you can see that I do in fact have odds favorable momentum on my large chart. We're just going to walk through it. Absolutely. So when rule number 1 is met, I have to go to rule number 2. Let's see if we have a clear path, and let's talk out the recipe, guys. So price bars reached Fibonacci resistance. When they did, have my trigger lines broken through? Are my smalls on the other side? Are my large on the other side? Or are all my trigger lines still hanging below? And this is just a live read. They're still hanging below, which means that I have no idea what's going to happen at 78.14. 78.14 at this point doesn't even have the potential to break because none of my triggers have cleared. All of my trigger lines are below that key area. So this is what I'm going to do, guys. This is where I play if then. Let me take a picture. And I'm going to do this, and I'm going to say rule one met, strong triggers. And this is the best picture that you guys can take. Price reached fib, no triggers through. Rule two not met, it's a termination. Craig, big game, does that make sense? So what does this mean? This means in the moment I have to just sit on my hands for a second. And then since rule two isn't met, it just doesn't matter to me what's on the other one. This is how I'm going to read a chart. But my brain can't sit still, right? So I start playing if-then scenarios. If smalls break with odds favorable momentum, it has the potential to break. Otherwise, it needs to roll completely for a short, right? It means that it's either going to break and I'm going to look for opportunities, or it's going to take a minute because it's going to have to roll. So if I go back to it, so far it's holding, isn't it? Price reached. Nothing's gone through. There's just no reason to go long yet. So we'll give it a second. We'll let it marinate, do its thing. So the same is true here. This is the NASDAQ. Price reached the area. Notice how none of the trigger lines have broken at all. Just sit on your hands for a minute. Hey, Sharman, welcome to the classroom. Got you coming through loud and clear. And then here, it had the potential to break, and sure enough, the momentum carried it up. Pretty cool, isn't it? With odds favorable, strong triggers have the potential to break things. Used to get caught on that look on the 13-2 a lot, Cav. And it may go up. The momentum is strong, right? And it doesn't mean that some of you aren't going to look for opportunities, but what it means is that there just might be a bounce, guys. And let's use the large chart to show you kind of just how powerful Fibonacci is. And I think you're going to like this. And this is for you newer guys too, as you build trust in it. Everything is pushing up, right? But it doesn't make the key area. And it pushes back to support and none of the trigger lines break. And the sellers try again. And it doesn't make the key area. And it pushes back to support and none of the trigger lines break. And the sellers try again. And it doesn't make the key area. And it pushes back. And the buyers try to make it go down. There's that 50-50 look. And when the sellers unload at that key area, it makes it to, this is the same area that they tried to get to 3 times. And here they said, you know what, to hell with it, buyers, we're going. And they make the key area. And there's probably a lot of profits being taken up here. And now that they've made the key area, the buyers finally made it. They may just stop trying to buy. They probably took their profits. Or there's a group of people that said, but that was the area that I wanted, but we have to wait for the reaction at this area. Are the buyers going to give up and the sellers take over? Or the buyers going to continue to push? Or are they a little split? And look at the indecision on the small chart. And this amazes me all the time. There's one bar on the large chart. There's the indecision on the small chart. Let them sort it out, guys. Does that make sense? And now if the small chart, or if the small triggers break, it has the potential to break. Now the smalls are above, right? If then, it's still not broken. But at least now it has the potential to break with all that momentum. And Cav, I appreciate that you would put, I used to get caught on this look. How many times did you have to see it before you stop trading into it? My answer is like 1,000 at least, 1,000 minimum before I finally stopped trading into termination conditions. I didn't even know I was doing it until I started posting in the room, and John Novak was like, dude, Mark, what are you doing? Stop. Stop. And I was like, but John, look at the momentum. He goes, I don't care. Where are your triggers? But we have to do it. We have to go through that, guys. We have to post in the room and we have to just find out what we're doing wrong, right? To minimize your learning curve. I haven't shared this one in a while. I'm going to share it with you guys. To minimize your learning curve, guys, post pictures of your trades in class. Every trade, win, lose, or draw. Because if you win and the rules are wrong, you may have a short-term victory. Guys, you might have gotten a little lucky, right? And we love it when we get lucky. If I make a mistake, I hope I get lucky. But it's a short-term victory, and it sets you up for long-term failure because luck runs out. And to be sure, you need feedback from us, and we are here to help, guys. And my whole job is to help you read indicators. My whole job is to get you comfortable with this concept. And I've never ditched anybody, ever, in the history of me teaching. I've never gotten frustrated with somebody. I've never written anybody off, but I need to see what you're doing so I can help you do it better. Um, and if you're placing trades, you're participating in class, guys, keep it on that simulator. You can't lose money. You can't lose money on simulator. It's impossible. It's pretend. So you need to get that feedback, guys, and the feedback will get you where you want to be. The feedback will get you to that next level. The feedback will make you a chart reader. And then once you lay that foundation, once you're comfortable and capable of understanding these simple advantages, once you're comfortable and capable of doing it simple, guys, that's when I pawn you off to my brother, and that's where you join his seminar, and that's where he takes your basic foundation, your basic understanding of momentum and areas likely to hold, and he teaches you how to really, really capitalize the software, to really take advantage of what's possible with what we do. I've got three divergences in the same price range on a 50-50. What do you guys think? Three divergences in the same price range. Large triggers are still below the area. Is it okay to sit, Joel? What if it goes up? Isn't somebody going to laugh at me in the mall? I'll probably get a random phone call. Nobody's going to laugh at you guys. It looks like it has the potential to, right, Craig? But if it's going to roll over, if this is really going to be a top, these are all going to roll, right? The same way, if this was really going to be a bottom, everything rolled. Everything eventually turned green. Right now, it's pushing up. Right now, the momentum is up. Right now, everything has more pressure up than it does down. So, just going to wait a second. And you're absolutely right, Cav. It can break and pull back, which is what I'm hoping for. Or the longer path, Craig, is if this is going to hold, I'm going to at least let my small triggers get to the other side of my large triggers. I'm going to let my large triggers go from green to red. Give me some indication that they don't want to go up anymore. And I just don't have that yet. So I'm in a holding pattern. And then when you go next level, you may try to anticipate the breakout. Big chart is always the dominant. And that's the big chart's what the big time investors want to have happen. So until the small chart gives me that total indication that things may be changing, I'm going to wait for opportunities to the long side. Um, and then if my small get below the large over here, then we may start looking for something. And this is what John Novak teaches, is using one extra chart to help you anticipate and understand when this 7814 area is less likely to break, and then looking for a way to capitalize after. But as a brand new user, all you need to know is that that's not your best look. And since it's not your best look, it's okay to insist on this being your best look. But three divergences in the same price range tells me, just wait a second, Mark. Just give it a minute. I don't have to be in every move, right? So if I'm going to use John's analogy and I'm going to try not to mess it up. He corrected me this weekend. We were having lunch. If you walk into the bank and you say, give me all the money, you try to be the first one in, right? You try to break your rules, you try to catch every move. If you say, give me all the money, you're a bank robber. You're going to prison. But if you walk in and you say, may I have my money, please, right? When the rules are met, well, then you're a customer and you're just taking what's yours. You're a client. You're just taking what's yours. And the rules are designed to keep you from being a bank robber and to keep you focused on being a customer, right? So you don't get tased and hogtied and sent off to the Huskow. And sometimes that means that you have to embrace the 90% theory, that it's okay to sit on your hands and do nothing until you have a statistical advantage. And at this point, there isn't one because three divergences in the same price range. Absolutely. How to get in or how to see it, Craig? So, yeah, no worries. So you're going to right click. Oh, you want to see the chart trader? Absolutely. Let me pull mine up so that I can do it on 8 and show you exactly what you're looking at. And while that loads up, let me go to the software user guide. But the ATM strategy, is that going to show you how to get chart trader? It is not. So let me get a chart up real quick for you. And I'll show you. And that's a great question. Let's get you through that. And it doesn't matter what I do. I'll do crude oil and I'll build a 5-1. I'm doing this off to the side right now. All right. So I'm building a crude oil off to the chart. No worries. So if you can't see it, there we go. If you can't see it, um, right here, it looks like a little two prongs off of a rectangle. It says Chart Trader. If you click it and click on Chart Trader, it'll bring it up over here. And then once it's up over here, the one thing that you want to do is make sure that you're in sim as you're practicing. And then come down to your ATM strategy. And Nexgen's provided you an awful lot here, a lot of different scenarios. So you can do two contracts with a 12 tick stop, 20 and 30 targets, or two contracts with an 18 tick stop, 30 and 50 targets, depending on what you're doing. So you always want to make sure that you have an ATM strategy in place. And then what that's going to do for you is should you decide to enter the market, and I'm just going to buy for the heck of it. I don't know what crude oil is doing. Is it's going to put your targets in place. It's going to put your stop in place. And it's going to show you what's going on. It shows you your price of entry. By clicking the line and relocating it, it'll allow you to move your stops, to move your targets. And then if you close out, you can't see where I got in or out. So the other side, Craig, and this helps me a lot in class, is right click on your chart and go to data series. And then from data series, scroll all the way to the bottom and you can plot your executions. So you can show your text and markers and watch over here what happens when I click OK. It shows me my entries and exits. So Chart Trader will get it up. And then plotting your executions will get it to where you can see where you got in and where you got out. And then third divergence, sure enough, it's pushing. And then John Novak. I'm having trouble opening the links here. Same thing, Michael. The exact same thing. You can plot executions on the other chart. You can put your chart trader up on the other chart the exact same way. And as long as they are linked to the same account, so they're both on SIM, right? I can put my strategy in, I can put my strategy in, and then if I can hide it on my large chart, and if I get in short on my small chart, it'll show it to me on the large chart as well. Are you talking about the range chart, Michael? Sophia uses a couple different charts, but I don't trade Sophia's plan. Um, Sophia uses what's called a range chart. And a range chart is it's a volume chart. It's a confirmation chart more than anything. And let me show you. And I'm gonna warn you. I'm not saying that you're doing this, but um, if you don't have the basics down, you should talk to your salesperson. But if you don't have the basics down, if you don't know what you're looking for on two charts, it's going to confuse you. But when you're comfortable with what you're looking for on two charts, it's pretty cool. And it's just for direction for Sophia. Didn't know how to use it yet. So you can build one, but I don't think you're going to have access to Nexgen's market flow. You'd have to talk to your salesman for that. I'm not exactly sure how it works. You guys look at that potential to break three divergences and look how it pushed lower. It doesn't mean that it's done forever, but at least we didn't get caught at the mid band, right? And now we're waiting to see what happens. So Michael, it's just a range chart and you can build it, but to get all the market flow on it, um, I believe that there's a switch that needs to be flipped. I'm not 100% sure. I'm the indicator reader, not the switch flipper. But I'm a huge fan. I'm a huge fan of market flow, but it's imperative that you understand your basics on the two charts first. It's an outstanding confirmation chart, but it won't get you into trades well, it won't create an advantage if the advantages aren't already present on the other chart. And that's why John put in the user guide when the rules are true, when the terminations are true, because it keeps you focused on the rules. And Daryl, I agree with you. Direction more than anything, right? Be on the right side of things. It's just another chart to tell you to confirm the direction when everything says up, right? And the HVA lines, as you grow with the software, give you an idea of where buyers and sellers have drawn some lines in the sand. Um, so again, it's confirmation more than anything. And Daryl, I agree with you 100%. Little extra info is good as long as you know how to use it. We'll teach you how to use it. Oh, John, thank you. John put in a video for trigger line reading because it's all about trigger line reading. See how the divergences gave us a lower push? And then Craig, are you with me in here still? I'm looking. But the large chart's still leading the way, right? The large chart's still saying don't do this yet. Um, no, that's not me. I'm not that good looking, Cav. I have a face built for radio. But this is a great lesson right now is that the large chart leads the way. And while it's easy to try to predict, to think, to hope, the large chart never gave any indication for shorts yet. And it keeps you from trying those less than likely shorts. Um, and it tested and it's pushing. And notice that everything is still going up, right? So we're still looking at it, still looking for it. And I think that this is such a great lesson because the large chart never said down. And because it didn't, it's a great opportunity to not try to be first, right? We don't have to be first. And then I'm super slow. And then Safia given a great example. Large chart leads the way. And when it does, look for an entry. And then Craig, I'm trying to get back to you right now. Can we pull back the view to see other resistance levels on the large chart? Absolutely. So on your large chart, if you click and drag horizontally on that bottom, it will tighten it up. You can also do it vertically and squish. You can see key areas off in the distance. Eventually it gets hard to read, but you can go through and take a look and adjust it any way you want. And then of course the flip side of that is if you accidentally squish it flat, the capital F in the right hand corner, it's the same on NinjaTrader 8, will get you back to the most current, and you can scroll down like this and spread it back out. So yeah, you can bounce it anywhere you want, but the key to getting it back to normal is the capital F, and if you accidentally bump it off screen, you'll see an arrow to push you back to it. So let's say that you are looking for the long trade. You may want to, yeah. So watch this. If it continues up, Craig, you can make an educated decision on where it's likely to go if it decides to continue up. If your rules are met for a long trade, this becomes a great target, right? The same way it was a great target from down here to get up, the same way we were using targets, going through. This is one of those instances where it had the potential to break. Three divergences said, hey, don't do it yet. And now see how everything is turning back to the upside? With every trigger line pointing up, there are some people that have a little more experience reading indicators that may look for a little snapback right to this key area. Right there inside of favorable large triggers to try and get up there. In big game, this is kind of next level. So it's not odds favorable momentum, right? But notice how the smaller pointing up, the larger pointing up, both triggers are above 78.15 now, and every indicator on your small chart is pointing up as well. What we would be looking for is a potential continuation. So it's not the best momentum, but now the path is clear. Now there's areas inside. And remember when I said that if you have 2 out of 3, you can take and manage. So I would be, in a perfect world, hoping that they try to retest that area of support one more time, right here inside of my favorable large triggers. Does that make sense? Because now everything is up and the path is clear. Now every indicator is up. Now I have an entry area, and I'm just hoping that it happens before it comes back. And John, your big honking pictures are clogging. Did that make sense, big game? When 3 divergences says hold on, wait for everything to agree again. And sure enough, there you go. Right where you said it was going, big game. Nice job. It was when I drew it. And guys, I'm trying to get pictures to come up right now. They seem to be struggling a little bit. I apologize. Debbie, I'm trying to get it. But for whatever reason, Discord is very, very slow right now. I have like a shadow of your picture. Here we go. So guys, great example. Everything says up. Eventually the path clears. Debbie takes the little pullback right to support right inside of favorable large triggers. And she's looking for it to continue up with all the momentum. Absolutely beautiful trade, Miss Debbie. Great patience too. Notice that she did it down here as well. And then after three divergences, she sat on her hands and waited just a second. Nice job. Oh, oh, you. Guys, teachers have nothing to do with it. Just be a student. You'll be amazed. I'm just giving you some information. You guys are putting it into practice. You guys impress me every day. You really do. My Discord is 100% locked up. I'm trying to get it. John, I promise I'm not ignoring your pictures on purpose. Give me a screencast link, man, because right now it's not loading up pictures for me. Or guys, feel free to get John's picture. He's trading NASDAQ right now. All he's saying is that when it breaks, everything agrees. He takes a trade. Beautiful. And then Shogun, I see you typing. Do you see how he lets it break and then pull back? Awesome, Shogun. Great job today. 8 grand's not a bad day. And then Safia, if you'll give me a screencast link. It's not letting me open your pictures. There's that S&P. Weak triggers right at resistance, right at a divergence high. Maybe a good sit on your hands opportunity, ladies and gentlemen. And then there's your reaction, guys. They made it, and now they're dancing. Weak triggers right at resistance. S&P done for today. The S&P is open for another 5 hours, Shogun. And then there's NASDAQ with everything above support. Every trigger's above support. I'm trying, Safia. My Discord's killing me right now, guys. I apologize. It's okay. It's weird. It just completely hemorrhaged on me for some reason. I don't know why. I've got this black haze over it. Here we go. Over here. Let's see. There we go. And then let me try your link again. Oops. Let me get this out of the way. All right. Safia says when everything goes up, let it break, pull back, get paid. Safia, that is a beautiful trade. Outstanding. It's just a trend trade, right? Has the potential to break with all the momentum, pull back to support inside of favorable large triggers. You know where the stop should go. Love it. Beautiful. Beautiful, beautiful. And then Cav, see if it'll let me open the link. There we go. Cav, same thing. Pulls right back to support, right inside of favorable large triggers. Why not make some money? Should have taken profit. You got stopped out. Fair enough. I don't disagree. I'm in this to make money. Great entry. From 75 up to 85. That's a $200 move. I don't know that I would give that much back. But my trading isn't your trading, right? And then big game on crude right now. There are two red fibs. Line at the top, one's much thicker than the other. What does that mean? Great question. Let me show you exactly what that means. So on your large chart, you're going to get Fibonacci levels from three different time frames, big game. And what's kind of cool is, let me show you this too. This is how your fibs come to be. And this floors me every time I look at it. So when you open up your software, it measures every swing on the market, not just like one big swing, one significant, literally every up and down in the market. And it does it not only in the moment, but it goes back historically and it creates these synthetic time frames and it projects forward. And when your software, before it goes through its sorting, and it's way more complicated than the picture that's on, these are all the potential areas that come up. And then your software, and John, cover your ears, the genius that my brother put together was that it takes all of these areas. Yeah, my iPods just died, so it's going to be a little echoey, I think. It does this to me right in the last few moments, and I don't know why. Let me see if I can reconnect it. It doesn't always let me. So it adjusts over to my laptop's microphone. So what happens, big game, is after all those calculations are done on your large chart, is it takes the areas from three time frames. So this is a 13.2 chart on the S&P. It would be the same if it were crude oil. The Fibonacci areas that extend all the way to the right and into infinity, these are from the native chart. Those are your large chart, your 13.2 chart fibs. The really skinny fibs that stop right there. And then Cav, if you're going to do something like Apex, that really becomes imperative, not giving it all back. The skinny fibs that don't continue, these are from your smallest, fastest chart, big game. And then the fat ones are from an even higher time frame, the 21.3. And what John's realized is that all three of these areas can create challenges in terms of targets or opportunities or termination conditions. So they all get put on the large chart. So when the market reaches not only a skinny fib, but a large fib, I know that I'm seeing it from a higher time frame as well as the 5-1 time frame. And notice how the skinny fib here extends to the right here. So they all come together to give you the best information. So each line is important. Each line on that large chart is important. You're frustrated with Apex. That's why you're in class to refine your trading. Okay, at the risk of sounding like a jerk, is it the trading or is it Apex? Because every time I've ever been frustrated with Apex, it's because I've decided to not follow my rules. The threshold is killing you? No worries. You know, I talked to John about this, Cav. And let me show you something. Let me find your picture. So something to think about, right, with Apex. What's the idea? The idea is to get paid, always. So if I get in at 75, right, and 85 represents $200, and you're on a three lot here. If you took a three lot at $200, that's $600, right? And at this rate, it takes you 5 days to get funded. The idea is that they don't want you to be comfortable giving everything back. And there you go. Well, in 7 days, but it takes you 5 days to hit the $3,000. It takes you 5 days to hit the goal, is what I was saying. And then John's saying that if the thresholds, if you don't like them, then TPT is easier. And it has a lot to do with your own personality, right? My personality says get paid here and here in GTFO. John Novak's personality says take that thing off into the next dimension, right? So TPT take profit trader suits John Novak's personality. I don't have any problem jumping out on a $300 trade and waiting for the next one. But that's me. I don't have the big brass ones that my brother has. So you'll find your trading style, but if you know that that's a challenge when you get up to a certain level, it's okay to just lock it in. Cav, there's a lot of trades where I know that I've reached trouble, right? I know that I'm at an area that may create a bounce. And then what I'll do is I'll put my stop. If a reversal bar prints, I'm out. I'll take the $60 instead of letting it come back and stop me out. Hard targets at 200, TTFM. So Apex suits me a lot. And it's all up to you, but when you're in it to get paid, it's okay to get paid. Well, but practice now, right, Cav? Practice taking profits now when it's appropriate so that when you're funded, you don't have to change anything. One of the biggest challenges, and it happened to me the first time I got funded, is once I got funded, I changed everything that I did to get there. I changed everything that I did to get there. I stopped taking the same trades. I stopped doing everything that made me successful. I completely changed my plans. So trade how you trade normally and build those great habits so that you don't have to adjust on the fly. So it's okay. God, nothing sucks in my life, Joel. Nothing. Challenges happen. Challenges make us stronger. So guys, that's it for me today. Thank you so much for being here. I hope you learned something. Craig.